You're watching TBPN. Today is Thursday, November 13th, 2025. We are live from the TBPN Ultradome, the Temple of Technology, the Fortress of Finance.
The capital of capital.
Ramp. Time is money. Save both. Easy to use corporate cards, bill payment, accounting, a whole lot more, all in one place. There is a bunch of breaking news. The big news out of OpenAI, of course. The OpenAI show continues. Sarah Fryer had some comments about ChatGPT's growth potentially slowing, and it's unclear. It's not in decline. It's maybe deceleration. We'll have to dig into that. It had me thinking about debt, and I was thinking about just the fact that the debt has come to tech for the first time, really. And this was sort of my take, and I'm a little bit, this is an area that I know the least about, and so I was doing some research, learning about a different industry, since it's just so abstract to me, because I've never worked in private credit or really seen that industry or even just really studied it.
You appreciate leverage. You've never been a big...
I appreciate it. Yeah, and mostly I was just wondering, we keep going back and forth on the debt is coming to tech narrative as like it's very scary. Like when debt comes, only bad things happen. We lived through the global financial crisis, and there's a lot of jitters when debt is around. It's like, oh, you could get wiped out. You could blow up. The backstop comes in. It just feels like all of a sudden we're talking about things with like a much more serious consequence than like, oh yeah, a startup raised some money and it didn't pan out and it was a zero and it wound up being a write down, but it was part of, a portfolio of equities that is averaged out across a whole bunch of different LPs. There's no even when like Theranos blew up, it was only equity holders that were lost. It wasn't this entire industry, and so it didn't turn into this like systemic issue, right?
Yeah.
But now it feels like with the 1.4 trillion of backlog that OpenAI has kind of opened up across a whole bunch of different deals, there is this worry that maybe the level of indebtedness could be risky, the level of risk in the system, the level of investment in the system could be something that's bigger than just, oh, if you're in this one name, you're taking a big risk. Now it's maybe like, hey, we're all taking a risk, and if we're talking about backstops at least.
Yep.
And so I was trying to understand, there's this old phrase from 2006, coined by Clive Humby, classic coinage. I love a coinage. He said, data is the new oil. And back then in 2006, his point was he was working as a data scientist at Tesco, which is this British grocery store. I don't know if you know this story. But he was working at this British grocery store chain. And his point was, we have all this data on a customer is in the rewards program. We see that they buy a Thanksgiving turkey before Thanksgiving. We see that they buy this type of paper towels or this type of milk or whatever. We have all this data, but we don't really do anything with it. The data is not valuable. We need to refine it, much like oil, into gasoline. And once we refine it into gasoline, then we can do things like targeted advertising, and we can increase our customer value. And so it was basically just a generic call to action for taking data science seriously. For don't just have the data there. Understand that the data is valuable if you extract it, if you work on it. But the metaphor, people have been saying data is the new oil for, I guess, 2 decades now. And it never really sat that well with me because unlike oil, data is not perfectly fungible.
Yeah.
So one tranche of data is not equivalent to another. Like Reddit is clearly very valuable since it kind of provided the backbone for GPT-3. All the analytics data that flows out of some mobile game is basically
a lot of data
useless.
is worthless.
A lot of data is worthless.
And all oil has at least some value.
Essentially.
Right?
I mean, I guess there are
There's
different
varying
levels of
grades.
crude, right? They're
Yeah.
different grades. And I was actually trying to play out the metaphor more, and I was wondering, like, can we get to a place where, so we can wring intelligence out of raw data like the oil, and the result can be low-octane gasoline, kind of like mid-wit, level like slop and AI slop, or it can be jet fuel, like a deep research report that's actually pretty great, or some code that's really reliable and really useful. But it all depends on the processing methodology. But the more interesting data is the new oil take that I don't think was considered in 2006 is that maybe the tech industry is going to look like the oil and gas industry soon. Like I was looking up how much debt is in the oil and gas industry. It's over $1 trillion of debt. And it's like, it's fine. Like, yeah, exactly. Yeah, clap. It's fine. Like, it's not this like huge systemic issue. It was 2 trillion, a decade ago, and then it went down and then went up. And it's like, it's all just a function of like how much oil and gas is going on, what are the new projects, how big are the projects, how much debt goes in. Like, just having a lot of mortgages in America is not intrinsically risky.
Okay. The difference is that if you identify oil in the ground and you figure out how much it's going to cost you to extract it. And how long you think you'll be able, basically estimating like how much oil is actually available in this site.
Yeah.
Then you can lend against that pretty predictably because you know that the price of oil is going to fluctuate, but in general, as long as it's in some range, it will be like a profitable operation to pull it out of the ground. And I think it's a little bit easier to lend against that than GPUs today, when the big debate is around depreciation schedules and will these GPUs, we have a sense that a data center that has power and basically a box with a lot of power will be valuable in the future. But if a lot of the cost of a new data center is GPUs, it's harder to gauge on what the value of those GPUs will be in 4 years than it is, okay, will this oil, like production site, still be producing oil in 5 years? I think that's a bit easier to answer and easier to lend against.
Maybe. I mean, sometimes there are tracks that only produce oil for 4 years, and you underwrite it against a 4-year depreciation schedule. And as long as you match the risk to the reward, the deal pencils out just fine. But I understand what you're getting at, and I think that as we dig into the OpenAI news, I think we'll have more. We can synthesize some of the recent. The recent leaks and rumored statements around potentially a plateau in demand for tokens on maybe the consumer side. But it is just like a wildly different question. Like the fact that you're walking through that math is very different than what the venture capitalists in 2000 were doing. Like Ev Randall, who's coming on the show on Friday, tomorrow, he always says he goes back to the Google prospectus from when they IPO'd, and Google was like the most pure play, just beautiful software business. So Google from 2001 to 2004 grew from 86 million in revenue to 3.2 billion in revenue. And net income over that period went from 10 million to 400 million, and that includes stock-based comp. So they were still making $400 million in profit with the stock-based comp. Googlers made a lot of money. They gave away a lot of stock. And so it didn't look like an oil business. There was not this big CapEx build out. There was not this big even this crazy R&D phase. There was just not there wasn't that much capital that went into Google before it became this monster cash flow machine. It was just
infinite
beautiful
money glitch.
It was sort of an infinite money glitch. It was this beautiful algorithm that was just discovered, and it was so elegant, and it just produced this monopoly, insane like growth rate for so long. And then of course they've been challenged and they expanded, and there's a million things. And then eventually CapEx did come into the picture as they grew their cloud infrastructure, GCP, all this other stuff. But for a long time, like tech just meant take a bet on a company, and it's either a $0 or $1 trillion or something like that. And so it's a lot different. And I wanted to dig into like the actual structure of one of these deals because I think that tech people, I was almost going to call this like, why is no one talking about Blue Owl? Because people obviously on Wall Street are definitely talking about Blue Owl. It's a public company. The stock's, I think, down like 30 to 40% this year. But it's the data center of finance.
Private credit.
Yes, private credit, exactly. And so I wanted to understand, like, how does Blue Owl actually interact with one of these data center deals? Because that's important to understand, like, where the risk winds up living. So I'll break one of these down. But first, I'll tell you about Restream. One live stream, 30-plus destinations, multi-stream and reach your audience wherever they are. So for Hyperion, you remember the Hyperion release? Zuck went on Threads and announced that he was going to be building a 5-gigawatt data center. It was going to be as big as Manhattan.
It's like somewhat of a Manhattan project.
Somewhat of a Manhattan project, exactly. So the crazy thing about that deal. So he spins up he puts out the announcement post on Threads, says, hey, we're going to build this 5-gigawatt data center campus. It's going to be online in a few years. It's going to be as big as Manhattan. He shares some of like where it's going to be, how many racks are there going to be, square footage, stuff like that. But he's basically just announcing that, like, hey, the project's financed. We're ready to go on this. Like, you would expect that it's a $27 billion deal. You would expect that, okay, Meta went down. They spent $27 billion. It's worth it. No, they got paid $3 billion. They got paid $3 billion. And the reason is because Blue Owl financed it with external debt, and they are basically paying Meta up front for the right to have them as a tenant, as a leaser, for a very long time. So they get this, like, we have Meta as a client. Meta's always going to pay their bills. They're like, no matter what happens with the AI build out, they're going to be good for it because they have this cash machine. So they are like the best possible tenant. Not like some fly-by-night, oh yeah, I'm a startup, maybe I'll be around in a few years. It's like, it's Meta. They're going to pay their bills. And so you have this massive data center project that's going to be paid for, even if it's not producing any valuable tokens. Zuck's still he's not just going to default and be like, yeah, take the company. No way. He's going to pay. And so in exchange for that, they got $3 billion up front. And so there's just each one of these deals. I think the more you dig into them, I want to have more of these people on. Mohammed El Arian at PIMCO, or was formerly at PIMCO. I know he can explain this a little bit more. I want to have more people on the show to help us get up to speed on this, because this feels deeply important to the current AI build out boom, the tech story. It feels like an entirely new piece of the puzzle to understand where this technology is going, and I don't feel equipped to understand it at all. Barron's did have a great article about Blue Owl, and a very funny interaction between Blue Owl and Jamie Dimon, and they're going at it, and I think it's interesting to read through. So let's read through a little bit of this to give you a little bit more flavor on what's going on at Blue Owl, because if you're just in tech, if you're just in venture, you might not know that much about them. But first, let me tell you about Privy. Wallet infrastructure for every bank. Privy makes it easy to build on crypto rails, securely spin up white label wallets, sign transactions, and integrate on-chain infrastructure all through one simple API. So in Barron's, I had this article's from October 24th. I had it on the table. We never got to it. We're getting to it now. It's the title of the article is Private Asset Star Blue Owl Has Been Flying High. Is it too close to the sun? This feels like a headline Jordy would write. I'm very skeptical about what's going on in the AI build out, in the AI boom. But let's dig in and see.
I like the phrase
ridiculous.
Private Asset Star.
Yeah.
I'm going to start calling our friends private asset stars.
For sure. So the article says, suddenly Blue Owl Capital is everywhere this past Tuesday. The upstart alternative investment firm with an aptitude for private credit announced a financing deal for Meta Platforms' $27 billion AI data center in Louisiana. That is Hyperion that I was mentioning earlier. Before the week before at the PAC CAIS Alternative Asset Summit in Los Angeles, Blue Owl's co-CEO Mark Lipschitz called JP Morgan Chase's CEO Jamie Dimon cockroach warning about risk in private credit an odd kind of fear-mongering. So what happened there was we talked about that blow up in the private credit world, and I have a little bit of background on this. So where did he say this? So I need to actually pull up what happened with the cockroach statement because it's very funny.
So that about First Brands?
It's First Brands. Let me see. First Brands. First Brands. Okay, so basically, private credit has been growing a ton. We've talked about this a few times. Ares is massive now. Blue Owl is really big, and the whole and there's basically been this little bit of a fight emerging between where the debt is coming from. Do you do private credit or do you go with the traditional bank route? And so Jamie Dimon, at least I'm pretty sure he's going head to head against Blue Owl in a bunch of these deals. And so there's this question of like, are they chirping at each other intentionally? And so Jamie Dimon was cautioning investors about potential risks in the credit market by invoking a proverb. When you see one cockroach, there are probably more. And so he was referring to recent loan defaults, such as the bankruptcy of auto parts maker First Brands and subprime lender Tricolor Holdings, as warning signs of broader credit issues. So Dimon noted that JP Morgan took losses on some bad loans and implied that trouble in one corner of the credit market could mean undiscovered problems elsewhere, implicitly casting doubt on the booming private credit sector. And so Mark Lipschitz fires back and says, I guess he's saying that there might be a lot more cockroaches at JP Morgan. And so he's actually saying maybe you should go check out their books and see if they have other bad stuff, because so First Brands collapsed was an isolated case of alleged fraud actually in the syndicated loan market, and it was not in the direct lending arena where Blue Owl operates. So Blue Owl had no exposure to First Brands, and yet Mark Lipschitz was still firing back at JP Morgan for kind of casting doubt on the direct lending arena where Blue Owl plays. So there's these cockroaches, there's these cockroach statements, and they kind of go back and forth on this. But the history of Blue Owl is also interesting. It's this like merger between a few different companies here, and it's part of this broader boom in alternative. And
Blue Owl was the primary lender for
CoreWeave, and they've also done Stargate. They've done a ton of stuff.
Yeah.
But interestingly, their data center business is, I think, like less than a third of their overall business. They have a lot of other stuff going on here. So George Walker, who's the CEO of the old line money management firm Neuberger Berman. He's a cousin of President Bush. He says it's extraordinary what they've done. It was just a startup, and now their $26.6 billion market cap compares to a number of large century-old financial institutions. There were some Blue Owl's backstory entails some rich behind-the-scenes machinations, but more significantly, it reflects the stunning trajectory of private markets, which have tripled to $26 trillion in assets over the past decade. The company's also yes. So, I mean, I do think it's important to keep like the scales in mind here. Like the 1.4 trillion seems so big in the venture context, and we think about Sam Altman as a venture-backed founder, but he's now playing in a market that's
playing a hyperscaler game.
He's playing a hyperscaler game, and so when I think about it's like.
And so
1.4 trillion, that's the same size as the oil and gas debt market.
Meta's Manhattan project scale data center, the 5 gigawatt data center that you talked about, them doing this deal with Blue Owl on. Meta's also just did a $30 billion bond offering, which has $4 billion of 4.2% senior notes due in 2030, and then all the way up to $4.5 billion of 5.7 senior notes due in 2065. and there was an order book of around $125 billion for the $30 billion issuance. So there's a massive amount of
Huge
demand.
demand, yeah.
So this is not, at least that we know of, what OpenAI has not been raising this style of debt for the business.
Yes.
And it's unclear if there would be like a ton of demand for OpenAI's like on balance sheet debt.
Totally.
Given that it's unclear if they're going to be able to spend, what they've already spent.
Yeah, but underwriting a data center with OpenAI as a client is very different than underwriting OpenAI directly.
Yep.
So there's some really funny quotes in this article. Blue Owl is the pretty girl at the dance right now, says Wall Street trader David Williams. We're talking many billions in private credit. Ah, yes, private credit. Though Blue Owl has 3 lines of business. Private credit, specifically direct lending in private equity deals, is the firm's calling card and growth engine, and the straw that's stirring Wall Street's punch bowl lately. They also have this like GP business. If you want to buy a GP stake in alternative asset manager, you can do that through Blue Owl. But what everyone's interested in is this private credit specifically for AI assets, at least from our perspective. I'm sure there's other people that find the other pieces of their business much more interesting. But its core direct lending business has 145 billion in AUM out of 284 billion total. So that's about half the fund. And that was conceived. The firm started in 2016 as Owl Rock at the Putnam Restaurant in Greenwich, Connecticut, of course, comfort food at its best, by principals Doug Ostrover, formerly the O of GSO Capital Partners, now Blackstone Credit, Craig Packer, a former Goldman Sachs partner, and Lipschitz, a former KKR partner. The name came from the wisdom of an owl and the stability of a rock, says Lipschitz, and the website was available.
That always helps.
So instead of relying on in venture, we all think of the GPLP private markets fund structure, right, Jordy? Owl Rock changed this. They don't do the typical GPLP split. They use what's called business development companies, BDCs. So those companies issue stock and lend money to businesses, usually those with junk credit ratings. So something like a one-off data center that really only has like one client, and it's not like Apple. It's not Microsoft. It's not an actually like, been in business for 30 years. It's not the government. And so it's going to have a junk rating. It's going to be a higher interest debt instrument. And this has actually been a trend. Other major alt firms are also turning to BDCs, which sport higher yields. And so BDCs send some 90% of the interest collected on those loans to shareholders through dividends. So they've basically created the same structure as a real estate investment trust or something close to it. And so this has allowed them to scale. So 2 of Blue Owl's BDCs are publicly traded. Others are private. They have Blue Owl Capital Corp, which yields 11.4%, and Blue Owl Technology Finance, which yields 9.9%. Both are down about 14% this year, the former from January 1st. And so Goldman Sachs recently called the fears overblown about the risk of falling rates and weakening credit, and they cited Blue Owl as undervalued, noting that it has a stock price to fee-related earnings multiple of 21.7, which is 5% below its 2-year low. So the stock has been beaten up, but it still has like a buy rating from Wall Street firms. Blue Owl has generated a stable, highly predictable stream of earnings, says Ostrover, the other co-CEO. It makes no sense that we're down more than our peers, he says. If anything, we should be down less. I love it. I love a defensive
Love the
CEO.
confidence.
Wall Street may be particularly wary of direct lending, as shares of both Blue Owl and Ares, which specialize in that business, have fallen hard. It's also true that both stocks had previously outpaced their peers. The second leg of the Blue Owl stool was created years earlier when a Lehman Brothers executive, Michael Rees, started a fund at Neuberger Berman that bought stakes in asset managers like D.E. Shaw. This is what I mentioned earlier about buying GP stakes. Rees named his endeavor Dial after his children Dylan and Alexia. He just took his 2 kids' names and pushed them together. Raised its own capital from Koch Industries and invested in the likes of Silver Lake and Vista Equity Partners. So he was a vehicle to allow you to buy GP stakes in Silver Lake and Vista Equity, which are not publicly traded, I believe. In 2020, Blue Owl merged with Owl Rock. And so the resulting company was named Blue Owl. A bank working on the deal had called it Project Blue. So Blue was added to and Rock was dropped because it was Owl Rock before. And so the hatching of Blue Owl was problematic to some companies in which Dial had invested, particularly Sixth Street Partners and Galoob Capital, both of which sued, claiming the new company created a competitor with sensitive information about their operations because, of course, they own GP stakes in the companies. And so in 2021, Blue Owl bought Oak Street Real Estate Capital, a Chicago-based firm specialized in sale leasebacks and triple net lease deals as its third business. This wing of Blue Owl has AUM of $71 billion and is home to the Meta infrastructure deal. So it's like a remarkably balanced stool. I'm sort of shocked when I was expecting it to be like, we hear about Blue Owl in the Meta context and that's their main business, or it's a new thing and it's only 5% of their business. But in fact, they have a pretty diversified offering across a few different products. And so this wing now has $71 billion and is home to the Meta infrastructure deal and others such as Stargate data centers in Texas and New Mexico. Next, Blue Owl is working on AI deals with Nscale and Valor Equity to finance purchases from NVIDIA, whose chips go for $30,000 and up, according to people familiar with the matter. Blue Owl built its direct lending business by borrowing from the Silicon Valley playbook of scale first, monetize later, or by underpricing established private credit firms to gain deal flow and then raising fees later. Most of the firm's direct lending business is done as part of private equity buyouts. So Thoma Bravo, Blackstone, Warwick Pincus, these companies come in, and then Blue Owl does the debt side of that. These investments generally entail floating junk bonds, a business pioneered by Drexel Burnham in the 1980s, but it was typically done with banks. Now it's done with these private credit firms. The private credit market has grown from $2 trillion in 2020 to $3 trillion at the start of 2025. So again, I'm like, that's growth, but that's not the craziest growth I've ever seen. Like when I go back to global financial crisis, you hear about these like 10x run-ups in these derivative markets. Like, I don't know. It just feels like we're still in like the early stages of actually ramping this piece of the capital markets and marshaling that to the really crazy stuff. It feels like the crazy stuff's coming in 2 years. I don't know.
Yeah, and that aligns with Doug from Semi-Analysis' point. He was like, we're still early in the debt cycle.
We're early.
But at the same time, market has jitters. I was working on our 2026 merch this morning.
Yes.
And I had about an hour call. And so I missed the fact that NVIDIA is down 4%, CoreWeave's down 8%. It's a little bit shaky out there. We're certainly not in white suits today.
No. Well, let's go over to the timeline. Let's go over to some of that other news that we wanted to touch on today. But first, let me tell you about Cognition, the makers of Devin, the AI software engineer. Crush your backlog with your personal AI engineering team. So Alex Heath has a scoop here in Sources. During a recent private call, OpenAI's investors asked about external signs that ChatGPT's growth is slowing. CFO Sarah Fryer.
The external signs were, I think, like App Store data. There was some data out of Europe.
Oh, yes. That's right.
And it was hard to read into the European data because Europeans...
They don't work ever.
It was coming off of summer, right? And ChatGPT is popular with students.
But European summer hasn't ended yet. European summer ends like late December.
No, I have to push back on that because when the French television network came...
That's true.
They were clearly done. That was about a month ago. Yeah. They were clearly back from summer holidays and they wanted to learn about the AI talent wars.
Yes, that's true. No, we're obviously joking there.
Anyway, so there's
been early warning signs. Walk me through some others.
So I can walk through Alex's coverage.
Please.
It says on Monday, OpenAI CFO Sarah Fryer held a private. She was really hoping to just not be in the news cycle this week, but when you're the CFO of one of the most important companies in the world, it comes with the job. But
what bag holder is leaking this?
Yeah, that's
private
my
call.
Question.
You're an investor and you're leaking bad news to sources. What are you doing?
Yeah, what are you doing?
Did you get out or something? Like, have you somehow facilitated some short position? Like, why are
jumped off the call,
This isn't very founder friendly. Whoever's doing this is
Yeah,
not
it's
very
not-
founder friendly.
not great,
Nope,
but,
not gonna do- okay, anyway, take me.
Anyway, Sarah Fryer held a private quarterly earnings call with the company's biggest investors.
Yeah.
As usual, the numbers she shared were mostly up and to the right, but behind the strong top-line figures, a quieter question hung over the call. Was ChatGPT's momentum starting to slow? During the Q&A portion of the call, sources say Fryer was asked to reconcile ChatGPT's meteoric growth in weekly users from 250 in September 2024 to over 800 million now, with external signs that the app's growth has slowed in recent months. Close followers of OpenAI's business have been whispering about these signals from research firms since late summer, but this was an opportunity for company backers to hear directly from leadership on the matter. After telling the investors to take third-party estimates with a grain of salt, Fryer acknowledged a chink in ChatGPT's armor. She said time spent had declined slightly in response to, quote, content restrictions the company rolled out in early August. She then referred to the loosening of those restrictions that CEO Sam Altman has said will be implemented for adults in December. So this is them. Sam came out and said, we're going to allow erotica on the platform. And Sarah says, and OpenAI expects the decline in time spent to reverse. And so this reminded me of a conversation we had about exactly a month ago where I said, I don't think them announcing that they're getting into erotica is a sign of strength. I don't think that's something that you do just because you want to, right? In my view, it felt like clearly there's user demand for it.
Yeah.
But at the same time, that felt like something that they would do in order to stimulate growth while they get a bunch of other monetization online, right? So like commerce, ads, etc.
Yeah, no, that makes sense. Yeah, I mean, the original founding team at OpenAI was incredibly idealistic, right? Incredibly you're going to work on a nonprofit on super intelligence, AGI, you truly are working on what you see as one of the most important problems, what I would agree with is one of the most important problems. Then of course, eventually the company evolves and you bring in business leaders. But at the same time, I do believe that when they say I want to cure cancer. I believe that.
I believe that too.
And so
but the reason I reacted
right.
strongly to it was that there had been messaging, around the same time of I don't want to be in a world where we have to decide between curing cancer and free education for the world.
Yes.
And so then at that same time deciding we're going to do erotica.
It was very weird timing.
It was
very weird. It was very weird timing that those two statements came out one after another.
I'm actually surprised why they're waiting till December to roll out the adult content.
So in this scoop, do we have any specific data on what exactly is indicated in terms of ChatGPT's growth slowing? Can we actually try and define that a little bit more? Is that users, because they were already at almost 1 billion users? Is it time on site? Is it monetization? Deceleration, we were talking about this, OpenAI has decelerated revenue before because I think they tripled and then they went to a doubling, or they were quadrupling and then they went to a tripling. And so they actually decelerated in 2024 and then they re-accelerated in 2025. And so I was kind of saying there's a good chance that you could see deceleration in the future. It's happened before. To be accelerating forever is basically impossible. But it would be interesting to track exactly how ChatGPT's growth is slowing. There certainly feels like there's just a level of saturation. Do you have the stats?
So SimilarWeb put out some information on month-over-month change in total visits to leading Gen AI tools. ChatGPT is at the bottom of a list that includes Gemini, DeepSeek, Perplexity, Grok, Claude, Copilot, and Meta AI. The key difference here is that ChatGPT is just so much bigger than these other platforms that they could still be adding more users on a per user basis than these other tools, even if their growth is slower.
Yeah, that makes sense.
Yeah,
Tyler, what do you
I mean, they do expect their growth to slow down. So, like from this is Epoch AI. It was like OpenAI revenue estimates.
Yeah.
So 2025 is 13 billion, and then they expect 2.3x in 2026, 2x in 2027, and 1.6x.
Yeah.
So I mean, it's not like they're just saying like it's going to go from 2x to 3x to 4.
Yeah, exactly. So I wonder how much of this is just framing something that was sort of already priced in as like a bad thing. Like I feel like people were expecting deceleration. And so if she says, like, if she's on the call and she says, as expected, we're really big, we're going to be decelerating the level of new users that we're adding. And then
I don't think she should say that.
Yeah, maybe that would be bad framing. I don't know. It just doesn't seem that crazy.
Please don't say that.
I don't know. It doesn't seem like that bad of a thing to say. Like Meta is not accelerating top line users. They have like 3 billion users. Like no one's expecting them to accelerate top line users. Maybe like randomly one quarter they accelerate, but not continually. And so I don't know. It just feels like an odd thing. Did you get a chance to read the Ed Zitron article? This thing?
I did, but I didn't. I felt it. Ed is such a massive OpenAI hater that I think it was hard to. And the sources were pretty unclear. Mm-hmm. It was hard to read too much into it.
Okay. Well, let me tell you about Figma.com. Think bigger, build faster. Figma helps design and development teams build great products together. You can get started for free. Should we head over to some timeline? What else people are saying? Cairo Smith says it's going to be very funny when LLMs plateau around 120 IQ, and what we've created is just a digital guy, not a god.
I mean, this doesn't make any sense. If we have like infinite digital guys, that's like literally a guy is just like a worker.
Yeah.
If we have infinite workers, that's like insanely bullish.
Yes,
it could still be bullish, but
it's
we've
hilarious.
been people have been promising.
He didn't say bearish. He said it's gonna. He didn't say it's gonna collapse the economy when we just get a digital guy. He said it's gonna be funny, and I agree.
Yeah. I guess that's true.
It's funny,
but this is still like a very bullish take. I think you might read this as like he's kind of bearish.
Yes. Yeah. No, I think you're right. If you get a digital guy, that's pretty powerful because guys can do a lot of stuff. It's valuable.
I love guys.
Yeah.
You need a guy for everything.
You do need a guy for everything. And you will in the future.
That's
you
been
will
one of the great
that's
luxuries, right?
Yeah, that's
the middle class has apps.
Yes.
The wealthy have guys.
Yes.
This is
and the apps get better with the apps get better with AI agents, right? Because you have an app that acts a little bit more like a guy than an app.
Real quick, Scoot in the X chat almost bought a counterfeit TBPN hat.
No way! Watch out.
There is a counterfeit TBPN store. These are not by us. They've made it look like it's by us. I'm not going to name the link, but we have not sold any merch. We will make the merch available as soon as possible. I was working on it this morning before the show, so it's coming, but do not buy any of the counterfeit merch. My big concern with that site is I don't even know if they ship it.
Yeah, that is a big question.
They also made like 100 products.
They made so many products, and I did email them. And to be clear, I emailed
and our lawyers emailed them, and we've submitted a bunch of takedown requests.
When I emailed them, I was like, "Hey, like I assume like you're just a fan." Like I was being too nice. I was being golden retriever mode. But I did say I was like, "Hey, like I appreciate this idea. This is very cool that you're enjoying the show. But like we just don't want people to get confused. And we have our own plans for the store."
They're like, "Okay, I'll make 200 different products."
They just didn't respond at all. And so then we sent a takedown notice, and we will be fighting that tooth and nail. So stay safe out there.
But please don't buy it because we have nothing to do with it.
Tyler, did you get a chance to read Fiji Simo's latest blog post, Moving Beyond One Size Fits All?
I hope you didn't read. I hope you studied.
Sat your ass down.
We talked about this for a tiny bit yesterday.
Yes.
This was
5.1.
just the 5.1 release.
Yes.
Yeah, nothing I would say super substantive in it. She kind of is talking about how I think with 5.1 they were going
Like we made our digital guy faster, better, stronger.
Is that what
She
it
talked
is?
about the EQ
Okay.
of the model a lot
Yeah.
rather than IQ.
Yeah.
So that's why you see a lot less benchmarks. I think it's just hard to actually benchmark that kind of stuff.
Yeah.
But the actual like style of the model, talking about kind of safety ish stuff where there's like, you know.
I mean, it is crazy following this company so closely because in here there's a line that says, with more than 800 million people using ChatGPT, we're well past the point of one size fits all. And 800 million sounds amazing, except I feel like I heard the 800 million number like 2 months ago. And I feel like they have been accelerating so fast.
You
I'm
would
like,
expect them to be at
850, 900. Exactly. And so the fact that they're repeating the 800 number is like,
They're like,
what's
sorry,
going on?
we can't add a third of the United States every month.
I know. It's very, very high stakes. It's very impressive what they built, to be clear. But I am really keyed on that, like 800, because I was excited they were going to hit $1 billion. It was going to be a big moment. And yet it feels like maybe that's a next year goal. But Nir Cyan has been going back and forth on this. Nir said, ChatGPT is officially in its Fiji SEMO phase. If you're wondering why the upgrade doesn't come with benchmarks, have fun. Rune says, you are confidently wrong about the internal dynamics of this. It could be better summarized as an infra cleanup. And Nir says, the source for my top tweet is Fiji's blog post from today, which discusses the release and its goals. I don't really know what else to say. I don't know. Is there hunger for benchmarks anymore? I might actually take the other side of this here and say that I like that they're getting away from benchmarks. I wish they didn't do a 5.1. I don't want any more confusion. What is 5.1 versus 5? Just make it better and don't do a release. And certainly don't tell people, because what if people
Easy for you to say because you're not in love with a specific version, John.
I'm in love with 5. I'm in love with 5, Rune. Bring back 5. I don't like 5.1. I need 5 specifically. Not 4.0, not 5.1. I need 5.
5, please.
I will say when
Just put the 5 in the bag, Rune.
Yeah, come on. Bring back 5. Bring back 5. We need to cyberbully Rune until we bring back 5. Even the most minor tweak to the model is unacceptable.
You can still use 5 Pro.
I know.
So that's got to count for something.
Only 5 thinking.
Okay, but I was saying when GPT-4, like GPT-4, like not 4 or anything, when that was the best model, they would do updates.
Yeah.
And they wouldn't like say, oh, this is a new model.
Yeah.
And people could definitely tell.
Oh, sure.
Like, okay, they released a model, it's worse.
Mm-hmm.
And then everyone on Twitter would hate it, but then I think
So you think putting a version number actually helps like fight back against that? Because people are like, oh, I get it why it's worse. You changed it. Like instead of like there being a surprise under the hood.
I think it's more it's just like easier for people to tell if there was actually a change when they're noticing something that they've been depending on. And then it's a little different now. Like
I just don't understand why you're surfacing it in the UI of like if I open my ChatGPT app at the top now, it says ChatGPT 5.1. Like this is a consumer iPhone app. It is today's Pulse is here talking about Blue Owl Stargate investment and ChatGPT 5.1. And I just have to wonder if like the 5.1 is like unnecessary. Like if I open up Instagram, it does not tell me what version of the Reels algorithm I'm on. They're going to change it every day. Like just change the algorithm all the time. Just make it better. And if you make it bad, I'm going to churn. So don't do that. Make it better every day, forever. And just keep shipping. Ship every single day. Like I'm sure that internally there are version numbers of Google search, right? Because they push to like a main GitHub branch or something, or whatever they use for their mono repo. But like there is version tracking for like the Reels algorithm. They just don't surface that to the user. So I don't know why they're surfacing 5.1 to users after there was like so much pushback over 4.0, 5.5, all this other stuff. It seems like, I don't know, it seems like a mess. You know what doesn't seem like a mess? Vanta. Automate compliance, manage risk, and accelerate trust with AI. Vanta helps you get compliant fast, and we don't stop there. Our AI on automation powers everything from evidence collection and continuous monitoring to security reviews and vendor risk.
There was one more note from
Please.
Alex Heath's article on OpenAI that actually I think is worth sharing. He says, after Meta's last earnings call, sources say, and this is confusing because the name of sources is...
I don't want to hear what Alex Heath has to say specifically. Give me some like people who are close to the matter. I don't want to know what sources says. I want to know what
sources
what people
say,
close to the matter.
Sources say that sources say.
Okay.
Sources says that sources say CEO Mark Zuckerberg joined an internal employee Q&A and shared a warning about the AI bubble. First, he shared a breakdown of how different players from startups to big tech names like Meta should think about timing their bets. He described three camps in the industry: optimists who see superintelligence emerging within 2 to 3 years, moderates who expect breakthroughs by the end of the decade, and pessimists who think it'll take well into the 2030s. Each outlook, he said, dictates how aggressively a company invests. Then he expounded on a version of the answer he gave me recently in our last interview. He noted that while unprofitable startups like OpenAI and Anthropic risk bankruptcy if they misjudge the timing of their investment, Meta has the advantage of strong cash flow. Mm-hmm. He also made the point that while big tech has historically been relatively debt-free compared to large companies in other sectors, the AI infrastructure race is leading Meta and its peers to start using leverage in a more normal way relative to their size. Like he told me in September, Zuckerberg acknowledged to employees that Meta's market cap could suffer if his timing is wrong and the bubble bursts, but the message was clear: we'll have the balance sheet to survive and emerge stronger than most on the other side. Super Dario was quoting that and said the obvious end game in the next 2 to 3 years is that Microsoft acquires OpenAI, Google acquires Anthropic, and Tesla acquires XAI. Only the large caps survive.
That's a nuclear hot take. That is
nuclear
crazy. How would that even? I don't know. Could Microsoft get the rest of OpenAI? I mean, I guess they probably have.
Depends on the price.
Size. It's a $4 trillion company versus a $500 billion. Yeah, I don't know. It doesn't seem like impossible. Let me tell you about Graphite.dev. Code review for the age of AI. Graphite helps teams on GitHub ship higher quality software faster. Get started for free. I want to run through some more of these posts. Yuchin Jin says, in contrast, OpenAI employees stayed for 2+ years, sold $6.6 billion of equity last month. Many hit the $20 million cap. Morale and vibes are high, but so is the turnover rate. New OpenAI hires are often shocked by how many Slack accounts get deactivated each day. This is a screenshot of an interaction between Jack Morris and Liang Chen Luo at XAI. Jack says, there are dozens or perhaps a couple hundred OpenAI, XAI, Google DeepMind researchers founding companies in the current climate. And
this was talking about...
says, the simple answer, the liquidity of Anthropic options is the worst among those frontier labs.
Yeah, this is talking about how a lot of people have been leaving various labs. Less people have been leaving Anthropic. And so Liang Chen is saying the simple answer.
Yeah, and so Andre Karpath, he says, bullseye, it's interesting how large of a fraction of people don't see the dominant first-order term that drives behavior of people in companies. You can construct a powerful world model just by understanding understanding the system, and two, assuming this there is only this single term, like liquidity, how much cash you have. What would be interesting is if you could... is if companies started offering liquidity in the form of annuities. So imagine you have an employee who's like a rock star. They're going to sell $20 million of stock, and they're going to basically be post-economic. If you could instead say we're going to be paying you out, like you're selling now, but you get $1 million a year or something. There needs to be some way to like sort of cap. Is there some way to cap the actual amount? I guess 20 million was the cap, but yeah. I don't know. There's some way to deal with this, like, you know. If you don't get employee liquidity, like they'll leave for something else. They'll just go somewhere else that pays them a higher salary. If you give them too much liquidity, they'll leave and start new companies. Very, very tricky to manage the team. But that is the nature of these companies.
Chad Byers, that is his real name. He is a Chad in the literal sense
and figurative sense.
he says, one of my strongest beliefs is that it's going to take 20 plus years to get AI penetrated into the real economy. I filled out a piece of paper at the doctor's office last week.
I filled out a piece of paper at the doctor's office last week too. It was crazy, and I was wondering, like, when will we see a fast takeoff in DocuSign? I finally realized why DocuSign has so many employees. Because you need to go to every doctor's office in person, apparently, for decades to get them to use online form filling technology. Like, general SaaS really has not permeated as much of the economy as people think. A lot of people still on spreadsheets for all sorts of stuff. A lot of people still on paper and pencil. There is we joke about being pro-ramp, anti-paper receipts, of course. There's a company that makes paper receipts that's worth $20 billion. $20 billion. There are fax machine companies. The fax machine industry is still over $1 billion. Still $1 billion industry. Crazy.
I would think it was actually more.
Yeah, maybe that's too small. It's sort of hard to like calculate because a lot of these things have been like rolled up into other companies.
Yeah.
And
big fax wants you.
Like I think
they want you to
Canon
think it's
is
small.
one of them, and so like I don't even know if Canon breaks out their fax business anymore because they sell so many cameras and other equipment. But it's fun. It's interesting. Near says IMO. In my opinion, the entire AI field switched from explore to exploit 2 years early. Everyone convinced themselves, no, this isn't the case. Look at our exploration. And it's like watching someone go on a 50-foot walk and find a cool tree when the entire continent is still covered in fog of war. Now that the terrain seems known, it should be harder to convince yourself. I suppose this makes sense given a lot of people hint at being good as gone as soon as they have enough money. But no, not me. I've been gone for ages already. That's a very funny post. I suppose weren't we talking about this yesterday? This idea of like where will the next innovation come from? Where will the next breakthrough come from? Will it come from any of the will it come from XAI?
Will it come from DeepMind?
Yeah, like how much do you need the college campus? How much do you need that environment?
Yeah, will it come from a university?
A university. The universities seem to have not, like it's very odd that the university system did not produce the Transformer paper. Feels like the perfect thing to come out of a university setting.
Yeah, I mean, it's really tough right now. You can stay in a university system and be a student and be taking on debt, or you can go work at a lab and have a good shot, at least if you did this a few years ago, have a good shot of making $20 million in a few years. And it's hard to give up that kind of opportunity. Yeah.
This Wall Street Journal article is giving more context on the AI boom. It says the AI boom is looking more and more fragile. AI stocks have swung downward as doubt rises about sustainability and payoff. Perfect isn't good enough, and any sign of weakness is a disaster. This is what's happening. It's like you double revenue and your stock trades down. It's very, very odd, but everything's been priced to perfection.
CoreWeave, who again is the only NeoCloud in the platinum tier semi-analysis, is down 45%.
That is remarkable.
Last month.
It's like they've built by all accounts, fantastic product. Fantastic product. I mean, like, I don't know, maybe semi-analysis got it wrong, but I don't think so. But it feels like they've built something that, as infrastructure, delivers at the level of the hyperscalers, just like a fantastic product. And yet the market like sort of ran away with that narrative and now is pulling back a little bit. So recent history suggests that the gloom won't last, but the shakeup serves as a strong reminder that the early years of AI pose a challenge for investors accustomed to measuring returns on a 12-month time horizon. Generative AI services require massive data centers and state-of-the-art chips and server racks that don't come together quickly. The companies at the heart of AI are now talking about years, plural, of all major investments still ahead. So everything has kind of sold off a little bit. Oracle is down the most from its 3-month high. NVIDIA's down a little bit. Google is neck and neck. They're doing great. And oddly, Apple didn't even make the chart because they're so not indexed to AI right now. The latest episode of Fragility started last week when shares of some of the sector's leading lights lost ground after a broad-based recovery on a Monday on news of a possible end to the government shutdown. AI stocks fell again Tuesday. NVIDIA's down 4% today, lost 7% last week, slipped another 3% on Tuesday, while leaving it well shy of its $5 trillion market cap.
Yeah,
Leading
looking at
companies
the
with
trailing
strong-
12 months, Apple is up 21%, and Microsoft, which owns a third of OpenAI,
Yeah.
is a huge AI beneficiary, has invested a ton in it, is only up 18%.
Wow.
So Apple, which has been going through
This
navigating a
is
trade
the
war,
secret. Just don't invest in AI.
do nothing,
Just
win.
just don't do it. Just skip it entirely. No. just do nothing.
Tim Cook's like, wait, why would I spend $100 billion on capex? I can
mean, to
sign
be
up.
clear,
I can,
Apple
he's like, I can sign up for
tried so
ChatGPT
hard.
for like $20.
So hard. She's like, yeah, we have Safari. We have this web browser, and you can go to use AI from there. Just do that on your phone. I don't care. That would have been the correct thing instead of the getting over their skis a little bit on the branding side. Fortunately, not on the financial side. So they've done very well. There is, of course, real reasons to worry about the sustainability of the boom. Chief among them is that there's far more AI computing infrastructure spending than there is AI revenue. A gulf widening by the day. OpenAI says it's planning to spend $1.4 trillion in the next 8 years, but is only pulling in around $20 billion of annual revenue today. And it lacks a clear business model to reach the hundreds of billions it needs within the next few years to keep the spending growth going. OpenAI is projecting losses will swell to $74 billion in 2028. So skittish has the mood become that CEO Sam Altman felt the need last week to defend the company on X, saying the spending was understandably causing concern. Wow. He says he understands your concerns, Jordy. He pointed to his plans to boost revenue with new consumer devices, robotics efforts, and AI cloud computing service, none of which currently exists.
And this is why when we were the Monday after that interview, when we were talking about it, saying that wasn't a strong answer because all of those things seem like businesses that will lose a lot of money, even if they're successful, until they can reach some huge scale. Look at Meta's efforts in hardware. Look at early days of any hyperscaler. Look at any robotics company, right? These are not cash engines. They're cash incineration engines that could one day
if they want to get more like cash generation, stop incinerating so much cash, OpenAI should I know they're doing a lot, but they should expand into like just rolling up HVAC businesses. Just buy a bunch of HVAC
adding
businesses.
agents into the workflows.
Agents. We don't even need to do that. Just buy a good, durable business and roll it up.
Plumbing, electrical, roofing,
storage units. There's a lot of good money in storage units. If they could get into some storage units. Just buying a storage facility and then just like
cloud storage,
flipping 5% off.
Storage units that look like clouds.
Cloud
storage.
Lawn mowing businesses. They could get into a bunch of lawn gardening businesses. There's a whole bunch of opportunity.
Landscaping.
There. Yeah, I mean, just buying multifamily homes. Just buying some multifamily homes. Single-family homes, getting the rent payments. They put the money in, they buy the house, and then they get the rent payment, and that's how they make the money. And I think that could be, it's a proven business model. Like, we know it works. It works for a lot of people. A lot of people, they start with one single-family home. They grow it. They keep
box of oranges. OpenAI Property Management LLC. So they have the property management company, and they actually they own the properties with another. And so they can actually play both sides. Play both games.
They could get into drop shipping. Think about it.
They could set up a TBPN merch store.
They could set up merch stores.
Counterfeit merch store.
For sure. That's what they keep talking about agentic commerce in the ChatGPT app. Imagine like you go there and you're just like, I need some t-shirts, and it just instantly sends you some t-shirts. They're getting into drop shipping. They could also launch a course.
How to build an AI startup.
$2,000. Buckle up, buddy. Get ready to pay $2,000. Sam Altman's already been driving around in hypercars, like
he has the
garage for it.
To be a course pro.
That'd be great.
Actually, he has a much better collection.
He really does. I would pay for his course, honestly. I would 100% pay for the Sam Altman course.
In a McLaren, in a P1, and he's telling you, I will teach you to be rich. I will teach you to build an AI startup.
I mean, how to do deals, how to do deals from Sam Altman. I would 100% pay $2,000 for that course. I'm not kidding at all. Like 100%, it's worth it. That would be better than any college course ever. Be incredible. Well, I'm glad we're having a good time. Let me tell you about Julius, the AI data analyst. Connect your data, ask questions in plain English, and get insights in seconds. No coding required.
Julius has an out-of-home campaign right now on SF.
It's really good.
It says, ever since I was young, I wanted to transform data into actionable business insights.
It's the best. It's the best.
Fantastic. Great work.
Meridew says, if you're down today, you're a certified beta bubble boy. You literally bid up SanDisk. WTF. Alternatively, you can call yourself a bad beta. BITCH. People are having a lot of fun. Dario.
Good. SanDisk is only down 15% today. So
SanDisk. By the hard drives.
Yeah. The White House last night tweeted, "We are so back" in all caps.
What was that? What did that mean?
What did they mean by that? In what way were we back?
I have no idea. But I have news I need to share with you that I can't share on the stream. Let me tell you about Fall, a generative media platform for developers. The world's best generative image, video, and audio models all in one place. Develop and fine-tune models with serverless GPUs and on-demand clusters.
Anna in the chat says the OpenAI McLaren Museum. They open up a museum.
The McLaren Museum. Just tickets, just like adding to our revenue. Like, we're going to charge $25. You can bring your kids. Like,
I would visit.
Yeah.
I would buy the course. I would go to the museum.
Yes. Well, our first guest of the show is in the Restream waiting room. Let's bring him into the TBPN Ultra Dome. How you doing, Spencer? Good to see you.
What's up, guys?
What's up?
I hope you haven't been watching the last 5 minutes because
we've been all over the place.
I want you to know that I have been watching. And guys, we are so back from the White House. That's got to be a reference to the government shutdown.
Oh, right? Yeah. Okay. I thought it was.
I forgot about the government. So
lost in the markets.
I forgot about the government.
I don't think about the shutdown.
Right.
Okay. Well, that's fantastic. For those who don't know you, introduce yourself a little bit. Give us a little backstory.
Yeah, everybody. I'm a general partner at Co2, help lead our growth fund, focus on late-stage transcendent technology companies. So we work with companies across, of course, software, AI, obviously, and then also some stuff in hard tech, SpaceX, Anduril, companies like this. So we're a 25-year-old hedge fund, launched a privates business 15 years ago. We're about $70 billion of AUM today across
overnight success.
There we go.
Where's the mallet? We're looking for the mallet. There it is. It's in front of your computer, John. There we go. This is for Co2. We are thrilled to have you. I've had many fun conversations this year. First one on the air. The reason for today's appearance is none other than Cursor.
Oh, yeah. What's new in Cursor world?
Right. The GPT wrappers are,
yes.
Their demise was maybe greatly over-exaggerated on X over the past few years. Look, we've gotten to know Cursor for a long time. We just think it's a really special company. Michael and his team are incredible. I'm sure maybe you guys saw Bree's piece about the company, the unique culture, how they approach hiring. I've just never seen a company with such a deep bench of really talented young folks. And then, look, on the growth speaks for itself, right? I mean, we're seeing folks on Twitter today talking about the company being the fastest ever to $1 billion of revenue, right? It's definitely in that air, which they disclosed today being at $1 billion of revenue. And then if you think about the things that have transpired over the past year with Anthropic coming out with an excellent product in Claude Code, OpenAI responding with Codex over the summer, again, an excellent product. All these things happening at once. And then you sit here and you wake up today and say, wow, Cursor's got an incredible business, incredible product velocity, an incredible team, and now their own model, which they shared yesterday, is their number 2 most used model on the platform in Composer. So, there's a lot of good companies in San Francisco. It's kind of a nice thing. Like in early 22, everyone was very worried that all of our 21 investments and everything was just going to, kind of wipe out. There's actually a lot of good companies in San Francisco. It's a great thing. There's a decent
narrative violation.
Right. There's a lot of good companies. There's a few great companies also, but there are very few of these companies that, the word of the day, or the word I try to always come back to, is transcendent. And you kind of know it when you see it, or you know it when you're around it. And that's what we think Michael and the team are doing at Cursor.
Funny story. Cursor is I'm incredibly inspired by their growth and user love and everything they've accomplished over the last few years. But I had a painful moment when they first kind of exploded onto the scene, because I realized that Aman, one of the co-founders, had been following me since like 2020 or something. I was like, I had this, I've had this, like, lingering fear over the last few years of, like, getting followed by somebody, not reaching out, not investing, and certainly would have been smart a few years ago to
well, listen, Jordy,
catch
it's
it.
not too
it's
late.
Not too late.
We think there's still a lot of upside, so we'll see. Fingers crossed.
One of the frameworks that I've heard kind of bandied about around what's going on, like, a lot of people maybe want this to be more of a winner take all market than it is. Yet maybe because of Jevons paradox, or just the nature of, like, it's very hard to understand how much code does humanity actually want to write. Like, it's potentially a ton. Yeah. And so you're in this, like, entirely new market that's a blue ocean, and it's massive, and it's just growing. And so there's opportunity. And I think you're in a unique position where you're in a number of names that do overlap somewhat, and there's a lot of opportunity. I'm wondering if you think that's the right framework, or is there more of a winner take all monopoly thesis with this particular market, or if there's other historical anecdotes that you go to kind of understand how this might play out.
Yeah, I'm not sure what the best. I mean, I'll get to the anecdotes. It's hard to find the best analog, and analogs are always difficult, especially for this. We're investors in OpenAI, Anthropic, and Cursor.
Yeah.
We're also investors in Glean, Harvey, Open Evidence, a number of companies across the kind of AI stack. Our view, right? If you just take a step back, right? People talk about the bottoms up TAM sizing on developers. To your point. People want to write a lot of code. 30 million developers in the world, right? A fraction of a % of the global population today. And so what's that number look like in 10 years, 20 years? What should that number be? I mean, that's not really an answerable question, but probably much higher. And then if you take a step back, tops down, you've got 5 trillion of global IT spend. And about a third of that is labor today. So, hey, OpenAI is putting up historic growth numbers, Anthropic's putting up historic growth numbers, right? All of that's well kind of directionally known. We see all these companies growing really, really healthy, and doing it in a way that we think is pretty sustainable.
Yeah. Did you have a reaction to Satya Nadella on Dwarkesh X, Dylan Patel? There's this interview, and he kind of talks about it feels like he was kind of sending the signal, I'm going to steamroll you if you try and build an Excel agent. I'm defending the castle that is Excel, but also I'm a platform for a bunch of other
Excel
things.
Is Excel Copilot.
Yeah, exactly. And I think that I would bet on him being able to defend the castle that is Excel, but I was going back and forth with Jordy about it feels a lot harder for Microsoft to put up a fight in AI for lawyers, because they just don't have a practice there. And yes, lawyers use Word documents, but it just feels like a slightly different go-to-market, slightly different product. And so I'm wondering on how you think about the edges of, like, where the hyperscalers or the neo hyperscalers, the foundation labs, might steamroll versus not, because Cursor is an interesting example of a company that feels like almost steamrollable and yet hasn't been.
Right, hasn't been, right?
Yeah.
And again, if you look back at the past, if I told you, hey, Claude Code is going to be this amazing product that's this good and you can use it, you'd think, oh my God, right? Cursor is good. Like, I'm shorting Cursor at the beginning of the year. Right? That's what a lot of people. So I just think it's we get to sit in a unique spot where we see all these things happening and go, wow, we're just so early in terms of the pie growing, the tide rising with all boats. I think I messed up that somehow, but to get back to your question around the hyperscalers and who wins where, it's hard to say exactly. I think that's kind of the big question right now. If you look back at like the beginning of the year, I think there was an open question around are these API businesses going to work? Is there long-term margin in the API business, right? Is something like Cursor just going to get run over? Is something even like Anthropic in the API layer going to get run over and squeezed? I think now people are kind of going, well, these businesses look really good. They've scaled really nicely, despite all these things, to your point, happening at once. Maybe now the question is, what's the architecture of that market look like with the hyperscalers over the next 10 years? It's hard to know. What I would say is if you take a step back and you look at the cloud AI revenues for the three hyperscalers, I mean, they've been inordinate beneficiaries of this trend, right? Open, Anthropic, Cursor, like Harvey, all these companies are great. The hyperscalers have done really, really well. And the move to cloud and the move from on-prem to cloud that's being pulled forward by all this is really, really compelling for them. So, like, they don't need to worry about winning, in our view, right? Like lawyers and beating Harvey. Like that's almost it's just further down the economic ladder in my mind for them. But we'll see. And then the other point, you asked about Excel. Yeah, Excel's fascinating, right? The ultimate like dominant software product over many decades. We've been looking for kind of the Cursor for Excel for a while. We've tested a few products. We've got an internal team here that builds a bunch of things that we
You guys have built your fair share of models over the years, I would hope.
Yeah, we do a lot with data science and now increasingly with AI. We haven't quite found something that works yet, but there are a few folks building some interesting companies that we're not invested in them yet. So I'm not going to say what they are, but it's an interesting opportunity. I think that more likely than not, Microsoft still ends up owning a lot of that.
I mean, the closed source thing is very important. Like, there is no VS Code in that category. People talk about this with Cursor for biotech. Like, what's the lab notebook? And I was pushing on I was trying to go deep with an investor who kind of came at me with a thesis of Cursor for bio, and I was saying, okay, well, if you're going to invest in the Cursor of bio, what's the VS Code of bio? What's the open source? What's the open source standard that you can fork that every bio lab uses? And they're like, oh, well, actually, like the labs use closed source stuff, and those enterprises do not just want to give up the data. So you're going to be fighting for the walled garden and all this other stuff. So it does feel like the Cursor for X model. I mean, it was really hot at YC, 2 batches ago? Everyone was doing Cursor for X. And it feels like it was wishful thinking in some markets.
Yeah, I think that's exactly right. And what's interesting is for biotech in particular, right? And we've heard Sam make more public comments recently, right, about their effort with the sciences and how much time they're spending there.
Yeah.
I just think that's where the value ends up accruing is something like an open. Anthropic probably throws their hat in the ring at some point. There's Isomorphic Labs coming out of Google. Yeah. There's the Chai Discovery business, which is a compelling company. There's a number of folks who are kind of building these pseudo lab companies that work with biotech. I think that's probably what ends up being more interesting because, to your point, there's not like a VS Code for biotech today, and there are just very few markets where there even is a VS Code analog. Right? Part of the magic of Cursor is they identified an incredible market where the models worked really well early, which was coding. Right? This has been the frontier of model capability for a while. You had the ubiquity of VS Code and of the terminal and all these things. And then you just built a really nice product around it and have continued to just push the frontier of what's possible. And now you layer in their own model with Composer. So we're excited about it. But it's hard to find markets with the same anatomy and structure and kind of opportunity, to your point. People are kind of squinting and like kind of forcing ideas a little bit.
Totally. Yeah. Jordy?
I'm sure you guys just try to back visionary founders that don't come to you for help unless they really need it, hopefully. But how do you think private companies, how much attention should private companies in AI be paying to the public markets right now? Because we're seeing so much growth, revenue growth in the private markets, and at the same time, we were just CoreWeave's down 45% in the past month. There's a lot of jitters in the market right now, and it's hard not to pay attention to some of these signals, even if a company's own revenue growth is skyrocketing. So I'm curious how you think the best companies are going to kind of manage through the next 12 months.
Yeah, I mean, look, the fortunate thing for the best companies is almost all of them have a war chest in terms of capital on the balance sheet today. And I think the capital demands of these businesses is a bit exaggerated relative to what it is, would be maybe my personal view, relative to like what's on X or what's in the media around these AI companies.
Yeah.
In terms of like paying attention to the public markets, right? I saw like Subu tweeted, I think a few days ago, something around, right? Like the market's been above its 50-day moving average for like over 100 straight days, like something like 130 straight days or something like this. So you know that the market's been good for a while when you see a stat like that. I think founders are aware of that and are pretty aware that it's a good time to raise capital and fortify a war chest, right? Which we've had a really busy Q2 and Q3 and now early Q4. I think that's kind of the way to think about public markets is, hey, when's a good time to raise capital when my cost of equity is lower?
Yeah.
But outside of that, like, I just think tunnel vision is everything. And again, just to bring it back to Kershaw, like this is a very focused company, very heads down company, doesn't make a lot of appearances, right? Like just stays in their lane and focuses. And I think that that's kind of the ultimate value, right? You don't want to be spread too thin. And look, there's a lot of folks like myself running around San Francisco now looking to give founders money and tell them when the value of their equity is pretty good, right? So we help give them that signal.
Yeah, there's also this interesting. It's hard to measure corrections in the venture ecosystem because they're much less quantitative than just looking at, you could, map the...
correction often looks like, wow, that company hasn't raised in 3 years.
Yeah, that, or,
Right.
There's some hiccup in LP fundraising or something. But there's many corrections in the public markets that I can think of that were like hiccups in the private markets, but for the most part, it was everyone just kind of being like, oh, there's some crazy stuff going on. Okay, like let's cancel a couple meetings and okay, we're back on 2 months later. Like the COVID-19 like sell-off was like a massive correction in the public markets, and for most startups, it was like, yeah, you needed to understand what could your company continue, or were you in like hospitality or something that was going to be heavily affected? But for a lot of companies, it was just like, oh, your March raise turned into a June raise over Zoom, and it was fine.
Yeah, I mean, I think that's spot on, right?
Yeah.
Like there is a level where, right, because we do have a public hedge fund. And so what's interesting is when you have conversations like the one you guys were having prior to this, right? As a hedge fund, you're always behaving in the market, right? There's always a choice to be making, right? It's very unusual to be in 100% cash or something like this, right? As a private fund, as a growth fund, we can just choose to not invest for a while, right? We can just wait a bit. And for us, like the convenient thing is, we only make, I think this year we've maybe added about half a dozen new logos to the portfolio. So for us, we're only making 3 to 5 core big investments a year on the growth side right now is kind of our cadence. So it helps us kind of work through whatever that cycle is and just focus on the asset, focus on the entrepreneur, focus on what we view as the 10-year trend and story for why this company is going to be so durable and so powerful over time. But yeah, like you don't see it, right? I think the other thing that's maybe like less discussed is we've had a bunch of companies, and I've seen companies outside our portfolio too that were kind of your 2017 era SaaS businesses that have really seen a nice bounce back and a nice acceleration over the past few years with AI. Really, like reinvention is the wrong term. It's just kind of like some product extension and pull
The
forward.
CEOs and the management teams and the teams are just re-energized and excited because there's this new capability that you can integrate across your entire platform.
Totally. And if you were some flavor of a source of record, your ability to now use that data and create economic value around it is just inordinately better. So, Yeah, I mean, look, the market's been up for a while. It's definitely interesting.
Yeah.
But for us on the private side, it's a little bit easier because we just get to focus on the companies.
Yeah. How do you think people are? Do you think people are reading too much into Sarah Fryer's like private phone calls these days? Or, I mean, it feels like OpenAI has like 1 billion users. Deceleration might be sort of like expected. Like people don't they don't expect Meta to accelerate on DAUs. Do you have any thoughts on like what's going on there?
I've got a big term because I knew this would come up, and so I thought of this before. This was my one big term here.
Okay.
Anxiety displacement, guys. We've got anxiety displacement. That's what's going on. Like people talk about anger displacement, right? All these things.
Yeah.
Look, market's been up for a while. Like that's like a fact.
Yep.
ChatGPT is less than 3 years old.
Sure.
Is a product, right?
Yeah.
It's growing really quickly, right? It's they've disclosed they're almost 10% of the world is using the product weekly.
Yeah.
Right? Like that's pretty remarkable, right? But the market's been up a while. We had I still think as a society, people haven't really processed the whole lockdown thing. We had the government shut down for a month and a half. Like there's all this stuff going on, and there's all this anxiety. And I think like that's been very displaced because people, like OpenAI is a great company. It's a remarkable business. It's hard to think of an analog for what they've achieved in less than 3 years is a product. And I think Sarah and Sam and the entire team do an incredible job. So people are definitely reading too much into anything and everything. Sometimes I think there's a little bit of a malicious spin on some of the stuff they've put out also, just to be very candid about that. Yeah. But I mean, it's understandable for there to be a lot of anxiety in society, in the market, and it's understandable that it gets displaced onto the company a little bit, but I don't think that's fair.
Yeah, it was a little weird. I mean, we were reacting to this idea that there's a private call with investors. Like, what type of investor is then leaking like potentially bad news to the press? It seemed like an odd chain of events, but there's certainly unlimited demand for bearish takes about ChatGPT right now because they've been on such a tear.
Every day, people log on to ChatGPT and ask for what's the most bearish thing about ChatGPT.
Yep. Yeah.
Right. Sure. That's the tweet prompt. Like that's your X maximalizing like prompt right there.
Totally.
It's probably something like that, right? What chart can I put together or what can I do? But look, we'll see, right? Worked with the company for a long time. Think it's an amazing company. I've been really impressed by what they've done. I continue to use the product every day, a ton. I think 5.1, the new model, is really a nice upgrade too. I enjoy it. So, I think they do a great job, and I think people definitely over rotate on it. But I get it.
We're excited for 5.67, which would be only a few upgrade cycles away.
I'm rolling my eyes at that one. Can't do it. Can't do the stupid 6-7 memes.
It's over.
I'm over them.
Killed it just now.
They're over them. I like that. I like the new coinage though. The anxiety displacement. It's good.
Let's talk about other growth funds because that's just a fun topic for every investor is to talk about everyone else. Do you think anybody has? Have you seen any other funds kind of blink yet, or hesitate, or kind of slow down at all? Get a little bit worried, or because it's just like we're seeing every day we get like $500 million of funding announced on the show, but that's a lag. It has like these rounds like really got done in late summer, early fall, and they're just kind of getting out there now.
Yeah, I mean, I'm sure there are some funds that have slowed down. I'm sure there are funds that are deploying more than us and less than us and those things, right? I'd say generally I think the vibe when you're catching up with someone over coffee or lunch is a lot more positive than over Twitter, right? And there's a lot more of like, well, how exposed am I to the AI trend, right? Like there are a few growth funds that feel like, have disclosed, right? Hey, I'm a little behind this and I'm trying to catch up here and there. So if anything, like I've felt more anxiety about that than, oh my gosh, we just put more money and pick your big premier company and, I haven't slept well about it. So that's not necessarily a great signal either, right? That's kind of like an average signal, but I'm sure there are some folks slowing down. I'm not sure who they are per se, because we have a lot of funds that are definitely deploying a lot more than us. in terms of absolute dollars and just absolute number of deals. So for us, we really just try to focus on our core, mission, which is, hey, what are going to be companies that matter as public enterprises, 10, 15, 20 years from now, and in some cases a little bit sooner, right?
What do you think about the capital-intensive pre-revenue AI companies? We had Fei-Fei Li from World Labs on. I don't know if they're fully pre-revenue, but it feels like a lot of the world model projects, the generative 3D worlds, Gaussian splats, what Google DeepMind's working on with Gemma, or is it Genie? Genie is the model.
Right.
It feels like something that I just think will be like the next Roblox vaguely, but there's nothing that you could do to underwrite this against revenue growth. And yet a lot of these projects are like, to do the next thing, we need $200 million. How would you as a growth investor even square that? Or would you just say, hey, let's just come back when we can actually see some adoption data?
Yeah, normally we would fall into the second bucket, generally, in terms of how we operate. It's different for everyone. I think all those rounds are ultimately just a representation of the idea size.
Totally.
Right. And of the opportunity.
Yep.
And then of course also of the entrepreneur and the team.
Yeah.
We did make, one investment very early that maybe fits this mandate, which would be Skilled in the robotics space, which has been a great company, has executed incredibly well, and we
think Luke Metro's over there now.
Oh yeah, that's right.
Cool.
Yeah, we just know someone who's on the team, but not one of the founders.
That left Androl to join. It's Skilled, right? SKILD.
Yeah, SKILD. Yep. So that was one where we leaned forward a little bit earlier than we would with most things, and again, that was on the back of just being very bullish on robotics on a 10, 15-year time scale and that team and where they sat in the stack. But generally, we tend to wait a little bit to see a company be a bit more fleshed out, but it's always case specific.
That's amazing. Well, thank you so much for coming on the show. Thanks for hanging out. Well, we will talk to you soon. Hope you have a great rest of the day. And congratulations on the Cursor round. We'd love to talk to you.
Great to see you, Spencer.
Have a good one.
Cheers.
Goodbye. Up next, we have Tyler and Cameron Winklevoss. But first, let me tell you about Turbo Puffer. Search every byte, serverless vector, and full text search built from first principles and object storage, fast, 10x cheaper, and extremely scalable. The Winklevoss twins are in the Restream waiting room, I believe. If not, we have a slight delay. Let's follow up on that.
Go back to the timeline.
Back to the timeline. Dario Amade predicts that we will get to 90% on SweBench verified in a year. That was 1 year ago. It's been 1 year. The best performing model, Sonnet 4.5 with parallel compute, gets 82% on SweBench verified, close to 90%, but not quite there. They put him in the truth zone. RIP to Dario. What do you think, Tyler? Bearish?
I mean, I think he was pretty close. It was 90,
it's pretty close. Good enough these days.
That was way more of a bullish take than most people.
Yeah, no, it is very impressive. Totally. Do you think it's saturated? People are saying. I think a lot of those kinds of benchmarks are generally saturated now. Yeah, I mean, it is interesting that like simultaneously you hit the 90% on SweBench, did very well there, but on the flip side, you have Andre Karpathy saying like it's slop and like you can't actually use it for like the frontier software development that he wants to do. Anyway, I believe we have the Winklevoss twins in the Restream waiting room. Let's bring them into the TBPN Ultradome. Tyler and Cameron Winklevoss. Welcome to the show. How you guys doing?
What's going on, guys?
Hey, guys.
Very nice background. Give us the update. Give us the news. I know we're running late, so let's just jump right into it. I assume everyone knows who you are.
Cool. So we launched Cypherpunk, a Zcash DAT yesterday. It trades under CYPH, CYPH. We're really excited about it. The mission of the company is privacy and self-sovereignty, starting by accumulating Zcash. And then in due time, we hope to invest in other technologies that promote privacy and self-sovereignty.
This delay is extremely
having some Wi-Fi issues.
Sorry.
Say more about the structure. This is Leap Therapeutics. You guys have rebranded it. This was an existing public company, but what more can you say on how this came together?
Yeah, so it's an existing biotech company, and we basically took it over and invested via PIPE into it, and then rebranded and changed the ticker today.
Awesome. So I guess Zcash has had a lot of momentum recently. At the same time, a lot of the DATs have struggled in more recently. Talk through kind of like the next how you're thinking about making sure just kind of navigating this time when the markets are pretty choppy overall.
Sure. So I think number one, the long-term thesis we really believe in. And I think that when you look at Bitcoin as a store of value or how you store your value, Zcash is really how you move your value. This is very sound, and we're obviously very bullish on that. But in addition, we're the largest investor into the DAT. So we don't have like a lot of fast capital that's looking for a trade. We're just long-term hodlers, or in the case of Zcash, Zodlers, and we just, we plan to hold for a very long time. And I think that's one of the differences is that other DATs have, had faster money and people that are moving in and out of it. And that's why we didn't fill the pipe up. We took, the vast majority of it. I think we put a $52 million check in. So the vast majority of equity will not be trading out of the shares.
That makes sense. Well, thank you for the update. Sorry about the Wi-Fi connection. We have some technical problems. Would love to have you back on the show and talk more about what's going on in your world, because there's so many interesting projects that you're working on. But really appreciate you taking the time to give us a quick update on Cypherpunk Technologies, and congratulations on the pipe closing, the rebranding, all the progress. So have a great rest of your day.
Yeah, thanks for joining, guys.
Goodbye.
Thanks, guys.
Cheers.
Let me tell you about Google AI Studio. Create an AI-powered app faster than ever. Gemini understands the capabilities you need and automatically wires them up, the right models and APIs for you. Get started at ai.studio/.
Who is building AI agents to make the Wi-Fi work?
That would be cool. It would be cool if we could deploy an AI agent. I mean, I guess that's like the next generation of the Restream waiting room. Like the Restream waiting room, somebody talks to them in a different waiting room and checks the Wi-Fi. That will be something. Maybe it's a 2026 project. Maybe it's a 2046 project. Who knows?
We'll see. That could be the final boss.
Hopefully, our next guest is dialed into the Restream waiting room. We have Max Hodak from Science. How you doing?
What's going on?
Welcome to the show.
Hi, guys. Excited to be here.
To meet you.
Great to have you.
I believe we met like years ago at an Oppenheimer screening, potentially. I don't know.
Very possible.
Very
that sounds
possible.
like something that probably happened, yeah.
Anyway, for those who don't know you, please kick us off with a little bit of an introduction on yourself and maybe the company as well.
Sure. So, I mean, I've spent most of my life thinking about how to engineer the brain, build. I mean, my origin story, I think, in this field started when I was in the 5th grade and I saw The Matrix, and I was like, I have no idea if we're living in a simulation, but we are definitely going to build one. Yeah. I'd kind of broadly characterize my ambition as to eventually disappear into the simulation, never to be found. And I, as an undergrad, talked my way into a lab that was doing neural recording in primates, and that was where most of my education happened. And then in 2016, I pulled into co-founding what became Neuralink, and I was there for 4.5 years. And in the spring of 2021, started this company, Science. We're now about 180 people. Our main product is a retinal prosthesis, like really the first retinal prosthesis that really works to restore vision. It was actually on the cover of Time last week, which is a pretty crazy experience.
Wow.
So you like The Matrix? Do you like The 13th Floor? Have you seen that movie?
I have not seen The 13th Floor.
Oh, The 13th Floor. It's like one of those movies that got terrible reviews, but I feel like it goes a little bit farther than The Matrix in terms of simulation theory and simulation hypothesis. It's a lot of fun. But anyway, we can get back to the actual story. So how far are you in building this business? Give us a general update on like the shape of the business. It seems like you're in the office right now. How big is the company? What's the progress overall?
Yeah, so we have a couple of different elements of our pipeline. So the retinal prosthesis, we think like that is first like just an end in itself. Like if you can restore vision to the blind, it is a quest that humans have been on for thousands of years. That is an unsolved problem. And I think like there's like real progress on that. We've got 2 programs. One is a retinal chip called Prima, which is this little, it's a little chip implanted in the back of the eye under the retina that has all these light sensitive cells, works in conjunction with a laser projection glasses worn by the patient. That finished a major clinical trial last summer that was published just recently in the New England Journal of Medicine. These patients go from being unable to recognize faces. They can walk around because they've got a little bit of residual peripheral vision. The trial was in an age-related macular degeneration, but they definitely can't read. They are like really profoundly blind and disabled. And the best patients in this trial could go from reading none of an eye chart to reading the entire eye chart. I mean, there's videos of these patients like filling in crossword puzzles. It's really very cool. And then separately from that, we also have like another key program in the company is a different approach to building brain-computer interfaces, where instead of placing wires, not in the retina, but like in cortex, instead of placing wires or cables physically into the brain or genetically modifying the brain, so that like there's some things you can do with optogenetics or sonogenetics. Instead, what we do is we grow up these heavily engineered biological cells that we hide from the immune system, and then we just sit this on the surface of the brain, and so we don't place anything into the brain itself. But what these cells do is they grow in and they wire up and they form new biological connections, and they can form billions of them. And so I think like the way to understand this, or like I think actually a fairly direct reference for how to think about
John's face right now.
This is like
so we call it a biohybrid neural interface. Have you seen James Cameron's Avatar movies?
Yes.
Do you know the ponytails that the aliens have?
Of course, I know exactly where you're going with this.
To plug into like their tree memory store or like their horses. So I think the question is like, if you wanted to build a ultra high bandwidth neural interface, like how would nature do this? Yeah. I think what nature would do is it would grow a new cranial nerve that has like a USB port at the end.
Yeah.
And that, I mean, that is super cool research, but that is definitely a research project. And so the way the company's architected is that is kind of paid for by the retinal prosthesis.
Sure.
Which is a like very practical near-term medical device. We've submitted for marketing approval in Europe for that. We're going through the review process now.
Yep.
The FDA actually is being much slower. It's possible it won't reach American patients for a little bit longer. And that's kind of crazy that Europe is going to get it first, but that's where we are.
Yeah, that's rare. Kind of narrative violation, but exciting.
Narrative violation for sure.
Yeah.
But so yeah, hopefully that'll be on market next summer, making money. And that is big enough to pay for the rest.
That makes sense. So why go with a retinal prosthesis instead of cutting a hole in the skull and putting electrodes directly on the brain and trying to deliver the signal that way? There's a lot of BCI firms, obviously you co-founded one, that seem to be approaching the problem that way. Is that just do you have a particular view on that? Is that just farther out and this is a way to get to market faster, or is there something fundamentally like higher bandwidth about your approach? Like what are the different technical trade-offs?
So BCI is not a product. BCI is a field.
Okay.
And there are many different types of BCIs for many different types of applications. Like obviously you can't go into the retina to decode like a video game controller out of the brain. Simultaneously, you can't stimulate like frontal cortex to do some like sensory feedback. And so it really depends on the type of thing that you're trying to do. And so in vision, which we think that a visual prosthesis is a brain-computer interface. We also think that cochlear implants are brain-computer interfaces.
Sure.
You don't need to be drilling in through the skull to get to cortex. So if you want to restore vision, you kind of have a choice of you've got the retina, the output of the retina is the optic nerve that goes to a deep brain structure called the thalamus. And then the thalamus connects up to cortex. And so within the retina, so let's just take a look at like the options that you have here. So in the retina, normally light shines in from the front. It hits the rods and cones. The rods and cones are the light sensitive cells. There's about 150 million of those. These connect to about 100 million intermediate cells called bipolar cells. And those compress down to 1.5 million optic nerve cells. That connects to about 1.5 million cells in the thalamus. And that connects up to like 200 to 500 million cells in cortex. And so no one, I mean, people have been trying to stimulate vision into the brain for many decades. And until the clinical trial that we just finished, no one had ever gotten form vision, like structured vision that the brain could intuitively assemble into a whole. Like you could get patterns that if you like looked at it carefully, it's like, oh, there's like a line here, there's a line here, it's like connected, that must be an A. Like here's a line, like that's an N. But in the Prima trial, I mean, they could read off words at a time, and that had never really happened before. Wow. And a big difference is that we're stimulating that first layer of cells, the bipolar cells in the retina. And we know that if you just go one layer deeper from the 100 million bipolar cells to the 1.5 million optic nerve cells, if you stimulate those optic nerve cells, you don't get this. You just get these diffuse flashes of light that you can't really attend to, and the brain does not intuitively assemble together because the brain has already compressed the signal. And you have to then figure out, like, what is that transform? How did the brain compress this? Or how did even just the retina compress this? And so the thalamus has the same issues as trying to stimulate the optic nerve, except it's under 8 centimeters of brain tissue under the skull. And then once you're up in cortex, you're dealing with hundreds of millions of cells that are distributed over like large areas that you just can't stimulate selectively. And so like people, if you do this, like you absolutely will get flashes of light, but converting that to like form vision that you can intuitively read is a totally different problem. And so, and then even if that worked by perfectly, one is like an outpatient surgery going through the soft tissue of the retina. The other is like a 4 or 5 hour brain surgery drilling through the skull. I think like one of those is you're going to kind of win sales. So
you said outpatient. Walk me through comparing the level of intensity of the surgery to something like LASIK.
So it's a little more than LASIK.
Yeah.
But it's like not a ton more than LASIK.
What about getting your wisdom teeth out? I was just coughing.
I mean, you could do this. So in the trial, many of them ended up being done under general anesthesia.
Okay.
But to be honest, in these cases, general anesthesia is really like as much like a commitment mechanism for the surgeon and the patient than it is like there's any medical reason to do it. I mean, you can't change your mind halfway through.
Oh, okay. Commitment
and
mechanism.
So,
wow, that's wild.
But from a like experience perspective, so you could do this you can make an injection next to the eye. Yep. The eye goes dark and numb for a couple hours.
Yeah.
And then you can go in through the soft tissue of the eye. You leave the chip. There's a little injector. The surgeon presses a lever. It leaves the chip under the eye. They come out. They're done. And so it's a really very simple.
Yeah. And then, sorry, just to be ultra clear, like the chip is in the eye. Then how am I communicating with the chip? Is it wirelessly? Is there a device that's on the other side of my head? Or you said glasses maybe are interfacing with that?
Yeah. So if you look at this chip under a microscope, it has all these little hex cells on it. And every one of these hex cells, like the Science Prima chip, it's essentially a solar panel. And it works in conjunction with, there's glasses that are worn by the patient that has a camera looking out at the world, although you could really get the video feed from anywhere. And then there's a laser that projects the image onto the back of the eye in infrared.
Okay.
And because you can't see infrared, you can't, like if you have residual peripheral vision if you're not totally blind, this doesn't interfere with that. You can still have that. But the infrared laser, where it strikes the implant, it works like an overhead projector. Like if wherever there's white that is projected, that's energy, and wherever there isn't energy, it's dark. And wherever the laser is absorbed by the implant, it stimulates the cells directly above that pixel. And so this is pretty cool because the implant is powered by the information that's projected onto it, like as a solar panel. This means that there's no implanted battery, there's no cable, like this tiny little fully wireless 2 millimeter chip is the whole thing. And also, because the eye moves relative to the projector, like the projector is shining in from the front of the eye, and then the eye moves and the image changes, this means that the brain can easily fuse it together with their existing vision. And so there's like some pretty cool stuff here. Like if you show one of these patients a solid green bar all the way across their visual field, they'll see a contiguous bar, even though the implant only fills a small area of the total area of blindness. And they'll say it's green and then it turns white because we can only get black and white right now, and then it turns green again. But the brain fuses all of this together. And so even though the implant only has 400 electrodes, as the eye moves around, you don't experience the image that falls on the eye, all falls on the retina like a camera. The thing you experience is the brain activity of the world model in the brain. And so as the eye's moving around, it's updating the world model, and that's the thing that you see. And so even though it's like 400 electrodes, you can't think of it like 400 pixels on a screen.
Yeah.
You think of it as just getting the information into the world model and the eyes moving around and the brain's cross-referencing all that. So it actually does significantly better than you'd think from being 400 electrodes.
That's fascinating. How do you think about the analogizing around the artificial intelligence community of what you know of the brain? So a lot of people in computer science or AI might say, with LLMs, we've built this piece of the brain. With the hard drive, we built the long-term memory. Has your research, have you mapped any of that onto the current state of artificial intelligence? Has it proven insightful to help for you to understand what's going on in AI?
This is funny because, I mean, at the very beginning of Neuralink and OpenAI, we were in the same building in San Francisco. And we'd have these discussions about like, oh, who's going to learn more? Is AI going to learn from neuroscience, or is neuroscience going to learn from AI?
Yeah.
And I think it has been revealed that like I caught up with one of those guys a while ago, and I was like, oh, like in retrospect, what do you think AI learned from neuroscience? Mm-hmm. He thought about it for a second. He's like, the concept of a neuron.
Yeah, that's it.
I'm like, that's basically it.
It's like it's literally just in the name, neuroscience, just neuron, and that's it. And then nothing else. Because like the whole brain structure concept. Yeah, anyway, continue.
But going the other way, I mean, AI has been so useful. I mean, there is a really interesting convergence going on. This is kind of called like neuro AI, where neuroscience is learning a lot from artificial intelligence in ways that I don't think any of us really would have anticipated.
Okay, explain.
And have you come across the Platonic representation hypothesis? So there's an empirical finding that different neural networks trained with different architectures, with different objectives and different concrete data sets, but for the same type of thing, like images or language or audio, they produce these similar internal representations. Mm-hmm. And what I mean by sometimes you'll hear people say like, oh, these models are like stochastic parrots, or they're just like they're just glorified autocomplete. It's like these people are safe to ignore. Like the mathematical objects that you see appear inside these models are super interesting and look a lot like the representations that you see in the brain. Mm-hmm. And so that is hinting at like there's some like deeper fact about the universe that we're figuring out here, that basically if you have a lot of compute power and you kind of run it in these ways, then you see these mathematical objects kind of emerge. Mm-hmm. And what evolution did and figured out in the brain is like looks a lot like stuff that you kind of see in these transformers and these other AI models. And there's definitely some interesting unification happening there. Mm-hmm. I mean, it's still like, it's a little more than speaking totally metaphorically, but it is still like, I'd say like instructive rather than literal. But that's getting like every month there's like some new cool thing that comes out around this. I will say that, I don't know. And my view is that the transformer is like a reasonably good model of like what cortex is doing, but there's a lot more of the brain. And so there's other parts that aren't fully capped, like that we're going to need something else, but it's not like the transformer is wrong. I think it's like probably part of the story.
Yeah, that makes a lot of sense. I wonder what you think about just the idea that it takes like millions of years to train a model to like drive a car, and it takes a 16-year-old like a couple weekends to do it, or the amount of energy that I will consume in one day of like generating my own reasoning tokens is like way less than what it takes to run a data center. There seems to be some sort of like exchange ratio of that's like we're off by a couple orders of magnitude, and maybe that's an algorithmic question. I don't really know. Do you have any thoughts on that?
Yeah, I mean, evolution has done. I mean, it has minimized. It's been very good at minimizing energy and optimizing some other stuff. But I mean, that I think is like the advantage of the biological brains. Like every now and then, I see pitches from companies that they're saying, well, AI is really energy intensive. So what we should do is we should grow up cultures of biological neurons and train them to do intelligence tasks. Because you can kind of do this. Like if you can grow up neurons on electrode arrays and you can condition them to learn things by stimulating them in different ways. Like when I was in college, I grew up a Counter-Strike aimbot. Like there's actually not that hard to do. Yeah. And this is a thing that I think nerd snipes many people in this field at some point. But I don't think that that's like the way to go. I think that there's like just really structural advantages in silicon. Like if you compare and contrast these two approaches, like in the deep learning models, like you can see all the weights, you can introspect them, you can like stop the model, you can change one, you can replay it, like samples out, you can copy it to disk, you can like send it over the network. Whereas with the biological living, like these organoid brains, you can't see the weights, you can't copy it to disk. It's like what it learns is the time integrated experience it's always had. And like at some point, 4 or 5 months in, it will randomly get infected and die and you'll have to start over.
Yeah.
And so I think there's just like structural, it's like the thing that the biology does is it's energy efficient, but my response to this is like generate more power.
Yeah, I like the idea.
There's no such thing as a low energy wealthy society. Generate more power.
I like the idea of like the solution to AI is just like have kids or something, and you're like you reversed it all the way down to like if I want artificial intelligence, I can do it biologically. Just have kids.
Are you and the team getting much leverage out of models today? Is it accelerating your progress? Or is it really just about having like deep domain expertise and being more obsessed with the problem than anyone else and hiring the smartest people in the world?
Interestingly, I think companies like this are really limited by infrastructure. And so like one of the things that I got from my prior boss was I totally received the gospel of vertical integration. And we're really not, it's not like we're held back by like genius scientific insights for the most part. We're limited by like, we need to get a new material in our like microfab deposition tool, but this requires hooking up some gas plumbing, which requires getting some specialist vendor to come out and like weld it to the machine. Or you're out of animal housing and like building that is like an architectural design process and then permitting and then construction. Like you're really limited by infrastructure more than you are genius scientific insights. And so even if you had this, like I think when I think about like being in the takeoff era and what is going to be the impact of progress in AI, like we're still limited by how that can impact the real world in really meaningful ways for these atoms things. But I'd say there's 2 places that AI has had a bigger impact. The first is ironically like comprehending regulatory standards and generating regulatory documentation.
I was about to say, if permitting's the bottleneck, can you have like a permitting agent that just goes and like spams the permits until you get exactly what you need?
Yeah, I mean, they're not quite like you end up doing a lot of editing, but you definitely just don't want to spam the permits. This makes the regulators mad. But but I mean, the filing in Europe to ask for approval for our retinal prosthesis, which we submitted last summer. Yeah, it was, I forget exactly how many, it was like tens of thousands of pages. It was a 65 gigabyte PDF.
Yeah.
And that depends on like hundreds and hundreds of standards that we're just expected to know all the details of.
Yeah.
And so being able to talk to these things is super useful. Like chat with these data sets is super useful rather than like having a big team of regulatory experts who are all kind of, it's like you do this through meetings. And then the other place that we've had big success with AI internally is in our protein engineering program. So there's, conventionally, many of the problems that we're interested in, you'd have to solve with like better electronics or better better physical devices somehow. And we're now at a point where often when we find a problem, we ask like, can we make a protein to solve this? So a couple months ago, we published a paper on a new type of optogenetic protein, which is these are proteins that can make a neuron light sensitive that is not normally light sensitive, so we could control it optically with light. And these typically require very bright laser light in order to work. And we're able to use AI models to find one that is so sensitive that it is responsive to like not just daylight, but like indoor office lighting. And so that allows us to substantially reduce the power consumption so that we can, because often the brain implants were often limited by thermals, like how much energy you can consume depends on how much is limited by how much you can heat the brain. So if you have more sensitive options, then you can have your LEDs be dimmer and have more of them. Then you can think about going from like thousands to hundreds of thousands. But then also that might turn actually into our next generation retinal product. That will have to go through clinical trials. That'll be a process, but it's possible that in 5 or 7 years, you won't even need the chip at all. You'll just get an injection and then we can just make the bipolar cells themselves light sensitive. And then that won't even need the glasses potentially. And that really comes out of the big breakthrough on being able to solve these problems with proteins is an AI enabled thing.
Chat says we should have you ask how to explain this to preschoolers. Some labs, various groups have talked about the revenue opportunity in just automating science, and it's usually very general, where they're just like, we're going to come up with a bunch of ideas, and then hypothetically they give the ideas to various people to execute on, and they get some type of like royalty on it. How much opportunity do you think there are for a more general foundation model company to just come up with a bunch of ideas and then actually capture real value from it? It feels like in some ways the pharmaceutical industry maybe doesn't have a shortage of ideas. They have a shortage of infrastructure and funding in order to test enough ideas to actually get viable, solutions.
Yeah, I think that a real bottleneck here is just the translation to human subjects research and then to the market is really difficult. We have like like a thing I sometimes joke about is like we're in a golden age of mouse oncology. Like if you're a mouse with a cancer, like we've got some great things for you. But
I love that. Let's give it up for all the mice out there.
That's great to hear for the mice. That's fantastic.
Best time at
we owe it to them for all that they've done for science, right?
Cancer.
But like that's the trade-off.
Yeah.
And so if you can, and I get it. It's not, you can't just say like, oh well, the FDA is the problem. Like the problem is that human subjects research is like life or death. It's like no joke. And like I've had the experience of like a patient goes into a new surgery for the first time, or you're gonna inject them with something and you're gonna wait, and like that is a very stressful experience. Like you want them, like, and that's stressful experience for people like me. I'm not even the one getting it, right?
Yeah.
And so there's trade-offs there that I think are very deep in like the way that we in our civilization like value human life, which I think is right. And that and so you have this knob of like how much risk do you think of taking in human subjects research and how fast do you get new things. And we know that the toolbox of science is very, very powerful because when you look at what's possible in the animal models, you have these amazing things that are possible, but then getting that into humans is like, and it's not just to say like, oh, well, if we we should just deregulate all of this. Like it's more complicated than that. Although I do think that there's a little bit of that. But at the same time, I mean, certainly there's an intelligence effect. Like I think that it's going to be inevitable that these things, I mean, the fact that you can fold all the proteins, at least in static forms, is a big deal. Like I would absolutely not bet against improvements in AI leading to improvements in medicine and healthcare. And I think they're actually, just to go one step further, I think then the thing that we're going to have to reckon with is healthcare. So like if you thought like 20 years ago, TVs and phones and computers were way, way, way more expensive. And now they're much cheaper, but we spend more on them total. This is like a technological growth industry. Like normally, if NVIDIA sells 20% more GPUs next year and their revenue goes up and their earnings go up and the stock price goes up and like everybody's stoked about this. But as time goes on and there's more things to spend money on in healthcare that produce better outcomes for longer lives, there's like spending should increase. But because we pay for this out of these like kind of insurance schemes, which are kind of pseudo fixed buckets of money, like if there were real breakthroughs in healthcare that allow people to live much longer and have much better outcomes, but they cost money, and you could spend like 10 times as much on healthcare, like that would be a catastrophe. Like you do not want to spend, like right now, our system would not handle spending 10 times as much on healthcare. But that is kind of directly at odds with it being a technological growth industry.
What about the BCI industry? I think it's interesting that we've seen like this boom in quantum computing and there's public companies do all this stuff, but it feels like
so BCI, specifically, I feel like the interesting question with BCIs is like, I want to understand your timeline.
Yeah, people are.
It feels like there's these therapeutic use cases where if somebody's blind and they're willing to take some level of risk in order to see, or at least see something, and then there's like the utility timeline and entertainment timeline where I just have, instead of wearing glasses, I just have a screen that's just embedded in my retina and I don't need to wear glasses and it's always on and I can, turn it off. And I feel like that's where, it feels like that's where you're going, is sort of a general purpose technology on a long enough time horizon, but maybe I'm off.
Yeah. I mean, it'd certainly be cool if like when your eyes are open, you've got the world of atoms. And when your eyes are closed, you've got the world of bits. The near term is these are medical devices, especially on the cortical side. I think these are very serious brain surgeries that like healthy 40-year-olds are not going to be like if your hands work, a keyboard is a really great brain computer interface.
Yeah.
And there's a lot of research that goes into like the design of the Xbox controller or the design of like the VR inputs, because if you can convey the signals from your brain to the muscles, like you can just capture that, and that works really well. But at the same time, I think many people eventually become patients. Like these bodies are great until they're not, and as they start to fail, we should have better options. Mm-hmm. And so I think that BCI, I think that there's a kind of a meme that it is an AI adjacent story, but I actually think it's like a longevity adjacent story. I see like the only organ I really care about is the brain. As far as I'm concerned, kind of the rest of the body exists to like keep the brain alive and healthy and move it around and cause it to do things. And I'm going to be fairly disappointed if I'm murdered by my pancreas or my heart. Oh, yeah. And so I think you can get to this point where you say like, well, instead of you've got all these hard problems, like, yeah, we've made progress on cancer and cardiovascular disease and metabolic disease. But again, like when you think about health insurance, like you can't insure something with a 100% loss rate. And that is what we were talking about in medicine. And I think you can get to this point where the brain is the thing that is really special and makes you you. And like when I look at a person, I see an agent and a robot, and biology makes great robots. But the thing we really care about is the agent. And if you can kind of deal with the agent directly and the rest become swappable parts, then instead of needing to cure cancer, we might just be able to avoid this entirely. And that I kind of see as one of the central elements, or at least how I think about the promise of BCIs. And so I'd say like a thing that I think could really be possible is like by 2035, it won't be widespread. I think it'll take longer than that for sure. But by 2035, can you offer patient number one the choice of like dying of pancreatic cancer or being inserted into the matrix?
Yeah. What's the strongest steel
2035
you can offer for the anti-transhumanism arguments? Because I've been steeped in this exact Silicon Valley lore for basically my entire life. I've heard it articulated a bunch of different ways in media, video games, The Matrix, and yet I've also seen a lot of pushback. There's a lot of pushback against the transhumanism stuff. What's been the strongest argument that you've had trouble debunking, if any?
Yeah, I mean, I don't really like the label transhumanism. It just has like all these like connotations. I also don't like the term like I think it is important that these things, like people don't want to be different. Yeah. They want to be themselves. Yeah. I think it's important to realize that things we're talking about should make you kind of just as much you as you've ever been, and just like with the best quality of life you've ever had. And I think like a concern with AI is that it could be massively like it could lead to really undermining our agency. It could be like lead to a massive loss of agency for humanity and the emergence of something else. Whereas I think that these BCI technologies are really about increasing human agency. It's a very like, they kind of exist to facilitate you, and it's not other than human. It's like it is a very pro-human technology. Yeah. I mean, as much as any kind of healthcare, right? Like we try, like we do heart transplants. We're working on artificial hearts. You'd have dialysis. We treat cancer. We like think that these things are worth trying to improve on. And it's only transhumanist in the way that like any healthcare is, that you don't accept that just like the state of the art in the Middle Ages, if you were like playing in the wrong forest and got a scrape on a branch, you could suddenly die of a bacterial infection 2 days later. Like we developed antibiotics. Like this is only transhumanist in the way that antibiotics are. It's this continuation of that story.
That's a great argument. I love it. Jordy, you have anything else? I was going to ask about the merge.
Yeah, I'd be interested to get your personal definition of the merge. Sam Altman wrote in 2016 that could be a scenario where people become best friends with the chatbot. Maybe the merge is something like AGI, where we just keep moving the goalposts.
Yeah. Or do you think it's inevitable, or do you think there's like some sort of fork, or where do you think the unexplored discussion surface area is around the concept of the merge?
I mean, the way that we interact with AI there's many different ways that this could go. I think like the failure mode of like Terminator seems less likely, but I definitely agree with Sam that like an underrated failure mode is people just start like delegating their decision making to it because the models just make better decisions. Like I was reading an article that one of the U.S. military like combatant commanders is now like running personnel decisions by ChatGPT. And if you're just like realizing like, hey, like these things make as good decisions as I make, then they kind of come like pre-merged. Like you don't need a device for that necessarily because we are just kind of like causing it to happen in the world, like whatever it wanted. And there's like some dark versions of that. Like you can imagine like an extinction scenario is that we just really become we're like, man, these things have great judgment. They really know what to do. We should like ask it for advice and listen to it, and like persuades a bunch of humans into suicide. Like you should, I think you got to keep an eye on those rates. They won't be zero. And I think it's unreasonable to expect them to be zero because you're talking about hundreds of millions of people, but like, do those trends, like what do those look like over time?
Yes. And keep an eye on the rates. That's the great summation of what's going on. The baseline's not zero, but if it starts climbing up, you got to watch it.
Exactly. Just like self-driving cars, like humans are not perfect. Don't hold them to to these unachievable standards.
Yes.
But like keep an eye on the rates.
Keep an eye on the rates. I completely agree. That's a great take. Thank you so much for coming by the show. Congratulations on the progress. Jordy, you have anything else?
Yeah, this was incredible. I wish we had more time.
Yeah.
But come back on whenever you want.
Yeah, I really appreciate this.
Thanks for having me on. Good to see you guys. This was super fun.
Yeah, we'll talk to you soon.
Cheers.
Have a good one.
Bye.
Let me tell you about Profound. Get your brand mentioned in ChatGPT. Reach millions of consumers who are using AI to discover new products and brands. You can get a demo at Profound. Our next guest is Andrew Dudum from Hims and Hers. 2 companies. No, just one company. Hims and Hers. Welcome to the show, Andrew. How are you doing?
I'm great, guys. How you doing?
Thanks so much for taking the time to jump on the show. For those who might not be familiar, can you just kick us off with a little bit of an introduction on the state of the business right now? It's a public company.
Okay.
People know telehealth.
Yeah, I thought you were going to say for anybody that hasn't heard of Hims, because
I'd
like to find one.
You guys have some great hair, so I feel like maybe we've got some customers on the call.
Oh, yes.
So Hims and Hers, we've been around for about 8 years. It's actually our 8th birthday this month.
Congratulations.
We went public in 2021. And the vision is to help people feel great through the power of better health.
Yeah.
So we connect you on your phone. You pick up your iPhone, you click an app, and you immediately get connected to one of 1,000 or 2,000 doctors who are registered in your state, and then can immediately engage in everything from cardiovascular disease risk, at-home testing for testosterone, menopause, weight loss, prescription treatments, all the way down to stigmatized things like sexual health and mental health and depression and anxiety. So, we treat, millions of patients on the platform, 10 to 15,000 patients per day. So while we are in many ways a new and innovative telehealth company, as what people call us, we're actually probably one of the largest healthcare systems in the U.S. today, just given the pure volume of patients that we treat. And it's all digital. So no matter what zip code you're in, you have access to world-class, consistent care, standardized care, which I think is one of the most important parts of all of this digital healthcare revolution, which is no matter where you are, you get great care, as if you're 10 minutes away from Stanford and can go see a dermatologist, right outside your door. So
Labs.
This year we're on track, $2 and something billion in revenue, profitable, and growing super fast, which is exciting. We're launching a whole bunch of new categories. Hit it.
Gong hit for you. Let's talk about Labs.
Yeah,
New
Labs.
product.
So Labs is an important one. We launched today 2 packages where you, for a few $100, can get over 120 biomarkers. This is the most advanced diagnostics, frankly, that are out there in the market. And I spend a ton of time figuring out with concierge doctors and others what is kind of at the leading edge, where you can get twice a year annual testing and then have all those biomarkers come into the platform and have thousands of doctors essentially overlook it, coupled with our AI, to be able to prescribe and treat very specific treatment plans for you. So it's not just a data dump of here's 120 biomarkers, good luck, throw it in ChatGPT, but it's actually real providers that are then helping you make tactical, personalized prescription next steps. So we have about 1 million square foot of pharmacy compounding in the US. So we actually make a lot of these medications ourselves. So if you're a person that comes in, like me, low vitamin D, testosterone's not as optimized as I want to be, so it's going to be a zinc and ashwagandha or magnesium supplement, along with core pharmaceuticals, let's say for heart disease, like a statin. We'll be able to actually put that together for you in a form factor that you love, customized into a beautiful personalized treatment and then delivered to your door for something like 30 or 40 bucks a month. So it's really this vision of a completely unified system that gets to know you, optimizes you, and then actually can verticalize the making of treatments for you so that we can see you get better and help you kind of get preventative, given we're in a country here where almost everybody dies of preventable disease, right? It's like heart disease, heart attacks, diabetes. It's stuff that takes like 10 to 20 years to develop. We should be able to get ahead of this stuff and actually start people, help people change that course of direction.
How do you think the labs market evolves? There's a ton of players in this space. This is obviously not your core business, although it feeds into the core business. I think there's players that are trying to use labs as like a wedge to then go and compete with you guys. You guys are kind of doing the opposite, but do you think that margins on labs like effectively go to zero over time?
It's going to go to zero. Yeah, I think anybody who's in the labs business today, whose core business is labs, needs a new business. You've got Quest and LabCorp and great partners. They've got thousands of locations, 10, $15 billion public companies, each of them. There's no way that those margins will be constrained when you have a platform like ours, where it's in our best interest and it's in our consumers' best interest to verticalize this infrastructure over time and give it away for free. Right. For you guys or anybody who's a Hims or Hers customer, it's to our benefit that we do a full panel and get you that at cost or even as lead gen, right? Like we'll pay you to take it eventually as you actually verticalize this infrastructure, because the data you then get back from it allows us to give you very tangible next steps and manage your care over 5, 10, 15 years, which is really where the long-term relationship and value creation comes from. So, for us, we're excited about these price points. It's $199 for a base package. It's $499 for the advanced package. My hope in 3 years from now, and my CFO would be mad if I said this, but it's like my hope is it's $30, right? And it just gets added on to your Hims and Hers membership. And if you have a treatment with Hims and Hers at all, you get this stuff for free, right? Because it just makes the platform and it makes your precision care that we can deliver so much better, right? Say you're a hair treatment and you're taking our oral chew for hair loss, which is like finasteride and minoxidil. And then we figure out that you're pre-diabetic, right? Our ability to compound that with a low dose of metformin or some type of other, microdosing GLP-1 or GIP, like that just transforms the actual clinical outcome for you. And it all started with a very simple relationship, which is I'm worried about my hair. I want to start taking advantage of that.
I want to know your take on Theranos. I have this hot take that it was never a good idea at all, because you can just take a full vial of blood and even if it worked, it wouldn't be that big of a product, because if I go to the doctor and they take this much blood instead of this much blood, it's just not that big of a deal. Do you think if Theranos had worked, that would be a successful product? Would that have reshaped? Like, was there ever a chance that would have been a great thing?
Yeah, the only reason that the idea for Theranos is interesting was if you can do at-home diagnostics as opposed to in-office phlebotomy.
Sure.
Right. So, that burden of leaving your house, going to a doctor's office, the number one fear in the country is needles, right? So you sitting there and somebody, putting a needle in your arm to take out that tube of blood, whether or not it's a tiny tube or a big tube, it actually doesn't matter. You had to go and park and take time off work.
I just see that as a terrible problem in our society, that people are afraid of needles. We should not be fearful. I don't like that at all. I feel like we should solve the fear problem before we solve the needle problem.
I think if you can do, and this is something we're working on, and we've talked about this, I think in the next year or two, you'll have at-home diagnostic devices that you can put on your arm, click a button, you feel nothing. It's kind of like a CGM, right?
Sure. Yeah.
And you can actually probably eventually look at the interstitial fluid. So you're not even doing injections deep into the blood, but you're actually just doing kind of like top capillary fluids to be able to interpret what some of these base biomarkers are. If you can pull that off and it costs $10 to do that, and you just click a button, take it off and mail it back to Hims, that I think really transforms access, because so many more people I think will do that versus the whole, kit and caboodle of like going and scheduling and showing up in office.
Yeah, that makes a lot of sense.
What's your like framework for how the GLP-1 market shapes out?
Yeah, it's a crazy market. It's like one of the most important categories probably in the next few years. I think you're going to have more and more treatments on the market very quickly, right? You've got Metsera deal with Pfizer and Novo that have been taking place, back and forth. You've got Kylera that just raised a huge growth fund that's got a GLP, GIP that is at par or possibly superior to tirzepatide. You've got Viking coming out probably in 29 or 30. You then have Wegovy and Ozempic going generic sometime in 2030 or 31, which is going to bring the price down to, it costs, it could probably cost $10 to make one of those vials, right? So I think in the next few years, the landscape is going to be incredibly competitive. I think the prices are going to come down dramatically. This is something we're very excited by. When we first started putting these treatments out, the prices were $1,500 a month, and now they're down to about $150. I would guess in 3 years from now, you can be buying, one of the best treatments for $50 a month. And at that point, it's going to be just cash pay. Customers are going to be able to use HSA, FSA, not have to deal with the pain in the ass of insurance. And then the massive market will expand pretty dramatically.
Yeah. You said you have thousands of square feet of compounding, something like that, tens of thousands.
We've got a million square feet.
A million square feet. I feel like that's been controversial in the past. There's been battles between you and maybe the FDA, maybe the
just a little controversial.
Yeah, I mean, we read about it in the Wall Street Journal. Are you staying the path on compounding? Is that where you want to be in a decade? Is compounding here to stay, or is there a world where you wind up partnering with the legacy pharma companies?
I think it's both, right? I think we will inevitably partner with a lot of these companies. We have the largest distribution platform for therapeutics in the US for consumers, right? So if you have a next generation treatment, we should be talking, because if we want to get your medicine to a lot of people, there's just no faster route to do so. So I think that's a very logical and natural thing to happen. And we've been doing things like this. We recently invested in Grail, which is one of the I think the most advanced early multi-cancer detections blood test. Simple blood test, can detect over 100 cancers as early as stage 1. I have every single person in my family take this test every year. More things like that are going to come to market, and I think will come to the platform. But for compounding in specific, there's really clear guidelines with regards to FDA allowance of compounding. There's different types of pharmacies. They can do different types of things for very specific reasons. Provider personalization, form factor, side effect management, et cetera. We're a public company. Our chief medical officer was the chief medical officer of Walgreens. Deb O'Toole, who's on our board, who runs the risk committee, was the woman who wrote a lot of the compounding legislation at the FDA for a decade. So I think we play very clearly by the rules. I think this is one of the first times in history that we're able to give this level of personalization to a lot of people. Right? Historically, this level of personalization only was possible for people that, were spending $50,000 a year for concierge doctors, and they could have treatments made for them. And I think it's our ambition to figure out how do you get that for the 1% to everybody. And so I think there's friction without question in that system, but the regulatory framework is very clear, and I think we're just staying the course. And I think over time we'll be able to figure out ways to make the other parties in the ecosystem feel like they're getting well compensated as well.
Yeah, makes a ton of sense.
How would you describe your management style? The company's up massively from the IPO. I feel like I started tracking HIMSS during the D2C era, right? You guys were the poster child of D2C, this meteoric rise, and then obviously the public markets have been wild. I'm curious, like how you navigate, the market internally, even with the team. Right? It feels like you guys are very built for it. What's your approach?
Yeah, I remember waking up one morning and looking at my wife, and the stock was $2.87. Like we were trading it, I think like 0.4 times next year's revenue or something like that. It was crazy. So I think the team has a stomach of steel, whether it's stock $70 or $2.87. I think, most of the executive team will retire with this company, including myself, because I think there's this incredible opportunity to figure out how you redefine what is a healthcare membership that every single one of us wants to buy. Like it's got the cutting edge. It has the most, the best diagnostics. It's the most affordable. It's an Amazon Prime version of healthcare that you can afford, right? It's like $500 a year. And for $500 a year, why deal with insurance in this country when everybody's insured, but everybody has a high deductible plan with a $2,000 deductible, right? So while everyone is insured, nobody can actually get the benefits of insurance because they can't actually afford to use all the cash. to then get the $1 of insurance. So I think our management team is, it's not a very glitz and glamour team, right? Like you're not seeing us out on TV 24/7. It's a really heads down team. It's a gritty team. It's a team that loves to build. We have a ton of fun together. And I think it's a team that genuinely focuses on what can be accomplished in a decade and not can be accomplished in the next quarter or two, which is why I think a lot of the investments we're making have a much longer time horizon. But as a founder that runs the company that has the high vote stock, like we have that privilege to be able to invest over that long period of time.
That makes sense. What kind of horror stories have you heard about Chinese peptides? There's sort of a meme going on X of people talking about it. Obviously, some of the pricing coming out, people buying directly there is pretty wild. What are the risks that people should be aware of?
Yeah, you've got to make sure the pharmacy suppliers are working with are good quality pharmacy suppliers. There's something called a certificate of analysis that high quality FDA oversight facilities in the U.S. Can deliver, third party tested and validation. You can actually ask for this certificate. We give customers their certificate for any of our compounded products, which actually shows the independent laboratories saying this is exactly what we say it is. So I think you want to have organizations or pharmacies that have that type of coverage, that type of third-party testing, good manufacturing practices, and ideally have some type of oversight from state boards or FDA. I think there's a lot of stuff you can buy online that's truly not for human use, and they say that as a way to kind of loophole around, but it truly is not for human use. And I would encourage people to try to stay away from that kind of stuff.
Random question. I'm curious to get your take on it. Something like 1% of U.S. GDP is dialysis. Doesn't necessarily seem like a problem for HIMSS to solve, but from everything about working in and around this industry, how do you think? Do you think it's a solvable problem, or is it just?
Yeah, my grandfather was on dialysis for this 5 or 7 years before he died. And it's like the worst thing in the world, like watching somebody on that, right? You have to show up to the facility every week. If you don't, your body deteriorates and you die. Dialysis is a result of you having totally failed taking action on you being sick for 20 plus years, like a very long time. Similar to cardiovascular disease, right? Like you show up in the ER at 60 and you have a heart attack, that took 20 years to build up. Like there's just no other way it happens. And so something like what we launched today, I actually think is the first step of the solve. Because you get for a couple $100 something like a lipoprotein(a) test, which tells you your predisposition for advanced cardiovascular disease, which means even if your cholesterol numbers are amazing, they're not amazing enough. Right, you have to have the best gold standard cholesterol numbers, like you're an 11-year-old kid, to avoid a heart attack because you have this predisposition to risk. Same thing with diabetes, right? Diabetes, A1C, fasting insulin, all of these are fasting glucose. These all rise over time. So if we're 30 or 35 and have these numbers, you can just chart what it's going to look like at 50. And so, micro steps in health, in food, in movement, in metformin at the right time, or GLPs, or preventative statins, or PCSK9 inhibitors, like all of these tools exist. And for the most part, these tools are not extremely expensive, right? So the real burden in the US healthcare system isn't actually lack of innovation, it's lack of education and access. So how do you get more people tested faster? How do you make it easy and less scary for them to take that first step, and then keep them motivated along the way? Because, these treatments don't make you feel amazing the next day, but they'll save your life 20 years from now. And I think that's where a brand like ours spends a shitload of time is you actually have to love Hims and Hers, because staying on this medicine is good for your health. And it's hard because you drop that habit and then you drop that benefit.
It makes a lot of sense. Well, thank you so much for joining. It's great to finally meet. Certainly we're an inspiration during again that D2C era. It was just a crazy moment in time, and it's awesome to see you guys execute in the public markets.
Yeah, congrats.
Thank you guys for having me on.
We'll talk to you soon.
Cheers.
Have a good one. Before we move on, let me tell you about Linear. Linear is a purpose-built tool for planning and building products. Meet the system for modern software development, streamline issues, projects, and product roadmaps. We have our next guest in the studio, Melissa Tokmak from Netick. The market is selling off like crazy. People are asking us to cover it, but we will talk to Melissa first. How are you doing?
Hello.
Good to see you. Have a seat right there. We do need to cover. I'm glad we have you on the show because the market is in turmoil, but your business is maybe less indexed to the market. Is that correct?
That is correct.
Explain. Explain the business, the news. Take us through it, and then we'll get your take on all sorts.
Well,
of things.
I mean, we serve the essential services businesses that are really backbone of our American economy.
By
right?
nature, countercyclical.
Let's give it up for the backbone.
The backbone of the American economy. Thank you. Okay.
So these enterprises are in industries like HVAC, plumbing, electric, solar, consumer health, energy across the boards. So whether the market is going down or up, that somebody, a business or a consumer, always needs these businesses. Actually, today I'm coming from San Francisco. As you know, all of San Francisco needs a lot of these services today because the weather is a complete disaster. It has been raining. No, it's complete rain. Everything is
Los Angeles.
shut down.
Okay.
Yeah, electricity goes off all the time, and I'm sure a lot in the Bay Area will be needing these services all day today. So what we do is provide really these enterprises with an AI revenue engine, right? So in these times of need, they can actually handle all of the demand with AI agents and serve the communities. But also when the demand is soft, they can predict the need and turn these relationships into multi-time recurring relationships.
Okay.
So I feel like every time I call a plumber or a roofer or an electrician, people like that, they don't, like the delay and the lag of getting, like there's always like crazy lag in terms of getting back and just being like, yes, I can come by at this time. And I feel like the lag is because they're super busy. Yeah. And if you can help them respond more quickly, they can generate a lot more
Exactly.
revenue.
Actually, many of them are very large businesses, and the lag is because everybody needs it. When you need it, odds are millions of other people need it at the same time. And I'm sure, like this has been talked here in this program too, there's a national shortage in skilled labor in these industries too. So it's actually, I mean, Jensen talks about it a lot, and it is a type of labor we need in the country, and until then, they're also
is that
going
what
to
Jensen
have
was talking about? I feel like he said we don't have enough plumbers, but I felt for some reason he was talking about like plumbing in data centers. Like,
it's the same, right? So HVAC technicians or plumbers, what the data centers need. Cooling, right?
But it's not that many.
Or to be able to stand it up. But if you think about it, it takes a lot of years to get actually trained for these jobs. Probably more than I went to school for at Stanford or you went to school for. Actually, it's very important. And then afterwards, you have to do in real life the training as well. So with data centers and consumers and businesses across the world, the need for these businesses a lot. And it's not only about HVAC, plumbing, electric, when you say essential services, right? It's also across energy and solar or consumer health, like the Bake Club, right? That we have been serving. So it's really the things that everybody in their daily lives need and has to interact with.
Yeah, walk through the typical stack of HVAC repairmen. I mean, I imagine somebody could just have, like a Yelp page and a Venmo account. Then some of them have a full website with a booking system and almost like their own little mini ERP, probably not something they built themselves. Maybe they have a Shopify site or something. And then at a certain point, they get a roll-up happens, they get bigger, they get more industrial, they get more mid-market. And then I imagine that there's some sort of central, point of record. Are you plugging into that? Are you trying to replace that? Are you trying to be the first choice for setting up all the touch points?
Yeah, so we primarily work with what you described as mid-market and large enterprise. So a lot of these businesses are owned by private equity and or still owner-operated, but they have built it from zero to hundreds of millions of dollars in revenue. So they will actually, I love that you went through that stack. they might have a more sophisticated tech stack than here, right? So for these businesses run on EBITDA, right?
Okay.
So it's extremely important that they think about their efficiency, the customer relationship, and how do they serve their communities. So primarily it will focus on, what type of data they have and where do they keep it, various software solutions, and of course, third-party aggregators where they might do advertising.
Yeah.
So we will partner with different solutions that they might have to make benefit of any of the data they can. But primarily what we're doing is bring frontier AI to these industries so that when their demand is very high, instead of losing that, they can handle it all at the same time. And when the demand is soft, they can generate net new demand, right? As you know, these industries, just like we talked about San Francisco today, is very volatile due to seasonality or some other external effects that they can't really control, right? So that's why it's very important how you need to be efficient when the demand is coming. You have to capture it all. And when it is not, you're thinking about
it's like a
how do I
retail
predict
brand.
the
If you
next
can't
need?
sell during Black Friday, and if you're in Q4, you're cooked. Like you're probably not profitable
Exactly.
at all.
Exactly. Or even how to predict the next thing. Like one of our customers, there were tornadoes in Missouri a few months back, and before the tornado literally happened, using Netiq, right, reached out to potentially affected areas and talked about generators. How would you feel if your electricity went in the studio?
Proactive.
You would not like that because your
proactive.
business would be down, right? But then
I
afterwards,
tried to get a generator when the power was out last year.
it was a
Doesn't
denied
work.
buy.
Doesn't work well.
It doesn't work
job.
once the crisis
Once it's
starts.
out, because the electrician's
you're
like,
out.
yeah, buddy, I got 200 people calling me
me
asking
right
for
now.
the same thing.
I will help you out with the best
I got one.
in the
I got
area.
one. I'm covered now.
Yeah,
covered
but
now.
also, when the disaster actually happened, in 90 minutes, maybe they got thousands of calls, right? So how do you help? But it was great for them because they could answer every call with Netiq, and they had already maybe rescheduled the non-essential jobs that they had so that they could help the community in that moment. So that type of proactivity and focusing on the future and like revenue generating interactions for the businesses is very important for these.
Let's talk about traction.
Yeah, sure.
Yes,
You raised a new round.
I did. Today
Very
we
low,
announced
very low
our
dilution.
Series B.
Let's
Yes.
let her hit the gong.
Oh,
ring the
that's
gong?
me. Yeah.
As hard as you
I have it here.
can. As hard as you
$23
can.
million Series B, led by Founders Fund. Hit that gong. Wow. With authority.
Powerful hit.
At a
Powerful
$450 million cap, which is a strong 4x step up in valuation.
Very low dilution. Very low dilution.
Yeah,
Talk
but
about
why?
that.
Well, yeah, why?
Well, I think from the beginning, I
Good hit.
really
You hear this? Good omen.
Still going,
When it still
everybody.
goes,
the same
it's a good
strength
omen.
we put into our business,
Exactly.
right? No, I mean, that is actually the answer. From the beginning, what was important to me is that we build a business with strong fundamentals, right? It is not about the hype. It's not about the valuation. For me, the most important thing, even in investments, we work with the best, and we're lucky and grateful that same people triple down in a row in Netiq. And when you have a business with strong fundamentals and strong margins and scaling efficiently, you don't want to raise more than you need. And if you do that, by the way, that would be a detractor actually in the type of talent that we're hiring today. They do want to work in nimble teams. They do want to run through walls. They want to be here because they want to build the future of
I want to
essential
run
services.
through a wall.
Yes, you should.
Get one of your customers to build us a wall. We'll run through it.
Exactly.
I have a question about models. We were talking to Brian Chesky, and he's starting to add features to Airbnb that allow the booking of like a chef. It's a very different. Model for someone who's traveling. They want a private chef or something like that. But he mentioned that he's having a lot of success with open source models. Obviously, he's operating at massive scale, and so every dollar counts. Are you seeing luck with open source models, or are you sticking to the closed source models?
Yeah. You actually can't stick to one.
Yeah.
Because if you think about it, maybe the difference there is we serve essential services industries. I'm like a utility to these companies. I can't go down.
Okay.
I can't be wrong.
Yep.
So the way that we build our own ML orchestration, right? The way that you build and think about models and what's really helping with each task that you need to do in that orchestration is very important. So you have to think about what's best fit in terms of address verification in this case versus understanding what does Jordy need when he's calling me, right? Or messaging me. So that would be need finding. So the whole point is, how do you think of these modules and what do they need to get done? And what is the model that can give you the best answer, right? And you have to obviously build a lot on your internal evals to be tracking that continuously and make any changes as you need, right? So today, definitely, like, we do use quite a bit of more closed source models, but depending on your evals, if something is not, you know, like keeping up with what we need and the new functionality we add, we would always test and think about any other model.
What about in 10 years?
Using,
you think in 10 years you'll
before
be
that, are you using voice models at all? Like you have like phone
we don't do
agents?
voice to voice. We do have voice. Actually, today we support our customers from voice, text, online, like any type of channel you can think. Right? We're the single inbox, right, for anything that they're really getting. So voice, yes, we support, but voice to voice is actually not there yet. Speech to speech. So we do really orchestrate all of that in terms of speech to text, reasoning models, and then text to speech afterwards to really give that accuracy, reliability, as well as the flow, the feel, right? And hopefully maybe in 10 years you were asking, we will have to think that, not in 10 years, maybe even a few, where's voice to voice, speech to speech is going. So according to that, we have to
What's the sales
evolve.
cycle like?
To be frank with you, I think we really sell based on ROI. So we show our customers, right? And they can talk to our existing customers at any point. Anyone interested? Private equity firms that we support, large companies that we support.
Private equity firms been one of the main channels in here where they're just like, hey, we have a roll up of a bunch of different underlying businesses. Let's roll it out.
Or we have a number of roll ups and we want the same software.
We have a roll up of roll ups.
I mean, that's what private equity firms are these days.
Today,
they are
everybody's
roll ups
doing.
of roll ups.
That is correct. It has been one of the good channels, but also it can be direct to large companies itself. I think the reason we love working with private equity, because in today's world, they understand the importance of AI and they're looking for an AI partner. Right? It's not
They're
really
like,
about,
we need an AI strategy. What can we buy?
Yeah, actually, you'd be surprised. Like, I think a lot of tech companies may be looking for something or a strategy to put on a board deck. A lot of these businesses I work with, I will say they're absolutely incredible and better entrepreneurs than entrepreneurs in Silicon Valley sometimes I see. And they are focused on real value.
They've experienced free cash flow.
Yeah, you can't hide behind raises and valuations, right? Like, all you see is that, does this help my revenue? Very easy. And for me too, I can say, hey, I will not give you any random words, AI this, blah, blah, blah. No, let me show you how is this going to affect your revenue. Let's talk about that. So when you do it that way, I think the cycles are pretty fast.
Yeah.
Do you think people are scared to compete with you? You seem like a pretty formidable opponent.
I don't know. I hope not, because
You enjoy crushing them?
I do enjoy crushing. You know?
How are you
Not only me, my team too. And this is just for them from here. You all that are watching right now, you're all beasts. And there's no one else in this world that I would rather work with other than you. Incredible people coming from Scale, HRT, Databricks, MIT, Stanford. But I don't want to even talk about the accolades. Who cares? Most of them have deployed AI applications in the real world, in production, and they run through walls every day to deliver for the real world, even though they could be anywhere. They could go in any company.
Well, for the Series C, we will get a wall built, and you can run through it.
Exactly. I will be doing that.
Yeah, thank you so much for coming on the show.
Amazing progress.
Congratulations.
Thank you for having me.
We'll talk to you soon. We have one more guest. Stay with us. The market is crashing. Everything is in turmoil, but the business continues. The show goes on.
The White House needs to announce 100-year mortgages. Second round of stimulus checks.
Let's move to 100-year mortgages. That will be the solution to all this. No, the only thing that can save us right now is numeral.com. Sales tax and autopilot. Spend less than 5 minutes per month on sales tax compliance. Also, fin.ai, the #1 AI agent for customer service. #1 in performance benchmarks. #1 in competitive bake-offs. #1 ranking on G2. And our next guests are here. Let's Let's bring them into the TBPN Ultradome. We have Jeffrey Katzenberg and Tomas. Welcome to the show, folks. Thank you so much for taking the time to come down to the TBPN Ultradome. Good to see you again. Congratulations on the news. Let's get some introductions first. Who are you? What organization are you with? Let's kick it off there.
I'm Tomas Puig. I'm the CEO and founder of Alembic.
Thank you.
Jeffrey Katzenberg, GP at WonderCo.
Third time on the show, second time on the show, something like that. But first time on the show here. Yep. Congratulations. And what's the news today?
Oh, well, the news is that we actually just raised $145 million.
Fantastic. Why don't you go hit that gong? Please enjoy this.
Am I supposed to be like Enter the Dragon here?
Yes. It's a... Whoa! Around the world,
we haven't seen that before.
Different style.
That was a very aggressive ring.
I like it. I like it. It's still ringing now. It has a nice sound. So take us through the business. How are you pitching it these days?
So what's really interesting about it is we do a little bit of a different thing in the AI space. We do causal AI. And really what our executives that we work with and these Fortune 500 and Global 2000s want to know is they want to know every chain reaction and lever that moves the metrics that they care about in the business at any time. And so where we started originally was on the marketing and sales side. And so they would be like, hey, I spent $100 million on a stadium name, all these unknowables, these large content pieces, all this brand. We all know it worked at the time. But nobody could actually prove down to the dollar, down to the actual effect of what it would be. And so when we built the company, originally you want to know how to shine a light inside this black box and actually be able to get the real dollar value so that you can start telling stories, because there's been so much of this improvement in, say, the programmatic side of the house buying these ads. Well, what ended up happening is once we built that, we found out it actually worked really, really well. And we got a lot of incredible clients. And then they started to ask us to do other things, like being like, oh, hey, now can you see how all that affects foot traffic? Now can you see how all that affects my ordering systems? And as we started putting this causal model out further and further, we realized it actually worked on an incredible amount of stuff. And so then our clients started asking us to be like, well, can you do our FP&A for finance? Can you do our supply chain? And so that's really kind of where the business came from. But the core of it is that like when you have low information or low amounts of stuff, you want to be able to actually affect the metrics you care about.
Take us through some of the case studies. Who have you worked with? What's the most concrete example of, you talked about buying a stadium. Have you literally found whether or not Crypto.com Arena penciled out? Have you looked at these? You know, I grew up at the Staples Center. I miss Staples. It's been renamed. But I want to at least know. Are you the guy with the red
stapler that
I want to at least know that it was worth it financially. Was it worth it financially? Can you tell me that?
Yeah, so we did
Let's check Staples stocks and say.
Yes, should Staples have stuck with the sponsorship?
See, the problem is it doesn't count for execution risk.
Yes.
So when we
there's always unknowables, but what can you know?
No, so we did a great case study with Delta Airlines that we actually presented with their CMO at the NVIDIA conference, at the GTC conference, where they were sponsoring the Olympics. And one of the things about these large sponsorships is there's two big aspects people don't talk about. One is every time you've ever worked in the business side of the house, they go, hey, you need enough historical data to be able to do something, right? The second is it takes a lot of time to get a response. Well, when they were doing this, when they were doing the Olympics, they were doing the promotions, one of the most interesting things we found out is we analyzed all this ad work that's coming out. You have only 2 weeks. You're holding up tens of millions of dollars on the P&L line while you're doing this, right? These are not cheap options. And when we pulled the study, we actually found out that the best piece of content that functioned for them, the most profitable, was not actually the content that was the ads. The ads did okay, right? The 30-second, 60-second spots. But what ended up happening is they actually, if you watch the Olympics, they had the Delta medal presentation ceremony, where like every time an American athlete would win a medal, they would take it, put it on, their shoulders, and that would be, a really emotional moment. Well, it may seem kind of obvious in hindsight, but when you have the Eiffel Tower in the background, really emotional moments, you sell a lot of tickets to Paris. But the key is if you can know that within a few days, you can either double down, right? You can sponsor the next Olympics. You can do all these things. And then you can actually act on it. Now, the problem also with when you do big, huge campaigns like that is you walk into the lounge for Delta Airlines and Team USA is the Wi-Fi passcode. it's not like one simple campaign, right? You pivot an entire company to a messaging set. But we were able to tell them within a couple days, down to the dollar, a material amount of cash that they were able to pull back. And then they could actually show that to executives.
So John,
oldest problem in advertising, right? Of like, I know my half of my advertising.
That's a line. I'm 100% sure.
Yep.
That 50% of my brand marketing is working if I only knew which 50%.
Yeah, exactly.
Which has been true in brand marketing forever, going back to the 1980s.
Yeah, I'm sure in entertainment, especially because there's less the attribution is really challenging. We did a bunch of marketing, and then people went to movie theaters, and then some people streamed it, and it's hard to actually track it all the way through.
But what the brilliance of what Tomas and Olympic have done is that using, well, first of all, and he should explain it because he's the brainiac here, the new math that came out of contact tracing from COVID, which actually has impacted many different businesses in terms of research and causality and attribution.
So we got advertising learnings out of contact tracing.
By the way, it's absolutely it's a biggie.
Very American to
entrepreneur says, "Oh, okay,"
turn it into an
advertising.
But when you think about it, is that either for COVID testing or for any of these attributions, what they are able to do, which was not possible even only 3 or 4 years ago, which is to be able to ingest billions of rows of data from all sources, and using machine learning and AI to actually digest that and make sense of that, and actually then be able to see directional in time. He'll explain neural networks and how this actually works, which, as I said, is way above my pay grade here. But I can tell you, which is to your question here, which is when we went to the top brand marketers, the first reaction was, no way. This is like, this is not possible. And this is just like telling us, pot of gold at the end of the rainbow, or Dumbo flies, or I don't know, whatever you want to say. And they went, not possible. And that's when these guys would come in and do these POCs. Disney, Mars, Accenture, Delta. And in the world, once is an accident, twice is a coincidence, 3 times you go, okay, well, this thing actually delivers. As fanciful as the notion may be, it's real.
Can you tell me a little bit of the history of how product placement works in Hollywood? Because that feels like the classic example of difficult to measure, but you've been in that situation.
We put this car in this one scene.
But it's when you start to actually think about this, there's $1 trillion a year globally spent on brand marketing. And brand marketing is everything from crypto on the Staples Center to an interstitial, to imagine in the Disney parks all the things that that they're able to offer to their brand partners, to putting a logo on a car. What's the value of having Oracle
on the race car,
on a race car in this, or a patch on a baseball player or a basketball player,
So has it always just been intuitive, or has it been more relationship driven?
No, it literally is intuitive. It is. I mean, he can tell you there's an old math, MMM. He can Tomas can really take you through, explain it, and that literally dates back to the 1980s. And one, it's directional, not specific, and two, the lag between the time it happens and you're able to gather the data on it was months. So it doesn't, the value of it, is really questionable.
I guess my question for you is, it's very clear that with the progress in AI, there's the ability to find insights in data. Like, clearly we see this across everything. My question is, there's so little ground truth that how can your clients A/B test your solution against something else? Like, if I go to a coding agent and I ask it to generate some code, I can run the code at the end and I can say, well, yeah, the code worked, right? Or I can read the report. But if I go to you and I say, how much was this sponsorship worth? And you tell me it's $4 million. And I say, Okay, like maybe it was 4. That could have just been a guess. So how do you justify the results that you spit out since we can't run a controlled trial?
So validation is one of the number one things we get asked constantly.
I'm sure.
When we give out papers, it's really funny. We have one paper where it's like a 2-page brochure, and then the next 15 pages is how we validate.
Yeah,
right?
Exactly.
And, one of the things that people don't talk about is it's actually very possible to test these things.
Oh.
So what you can actually do is you can do what we call backfit testing. You could set the machine backwards in time, and then you can test against things that you can withhold information. You can do all sorts of things to actually see whether, you feed the machine up to like last year.
Yeah.
You know what all the results are going to be this year. So when you predict what something's going to be, you can see how close you got. And so I think that when we're testing things, we use a variety of both synthetic data testing methods.
Yeah.
Because you have to keep in mind, we're not a transformer model or an LLM.
Sure.
It's an entirely new methodology.
Yeah.
And so when we grab this stuff, we have both synthetic data we can build.
Yeah.
So there's systems like for the nerds, like Tigerbyte that does causal synthetic data. Or there's real data like EFMRI data that we actually know that there's a cause and effect that we can pull from physical world or physical bodies that you can test the algorithms against as well. And then from the business side of the house, there's lots of ways to do it. Now, one of the things I like to correct on this is it's like, we often say the mantra of our company is we're about being directionally correct, not specifically wrong.
Okay.
And so when you need to make decisions, a lot of time when we do these simulations, we're like, here's the top 20% of things you need to absolutely keep doing because they knock it out of the park. Here's the 20% of things that are just literally hurting you.
Okay.
And when you have zero information, like you're in a pitch black room and you have no idea where the exits are, would you rather take a really, really good educated guess about where the exit is, or would you rather wander around in the dark?
Yeah.
And so I think that one of the things about business intelligence is when you have zero information, the value of the information you can get is that much more important.
Yeah.
And so we do
I'm
it
so
various
confused
ways.
about the back testing thing. Like how would you go back and assess the value of like Budweiser sponsoring Super Bowl 40 or something?
Yeah,
It's like you can't run the counterfactual.
Well,
you can
so
simulate it, but you
counterfactual
don't-
simulations
Yeah.
are assumptions. So think about it like this. A lot of people talk about probabilistic graph, right? Graph analysis. Probabilistic graphs, whether they're causal, whether they're anything else,
Sure.
is to a certain extent, I mean, being a little pedantic, LLMs are almost a probabilistic graph,
Sure.
right? Undirected till you query it.
A neural network.
And exactly. And so when we do this type of analysis, the thing about it is that we actually have seen lots of instances of the same exact thing. It's about the specificity. So we just did a calculation literally yesterday that we looked at 1 trillion connections across 6 months for a company. Like that's the type of scale of analysis we're doing. We haven't seen when you say the counterfactual when you're saying, what does it look like when you have a base state? We've seen the operating version of a company over years. And so we know what the base state looks like when there's no influence from that. The key is you have to have enough data. So in the old world, when we were doing all this analysis, we used to say, you hear about the term overfitting, right? Everybody's worried that is the model just biased? Well, in the old world, you'd say, I want to reduce the number of features, reduce the dimensionality to prevent overfitting, right? To prevent overprediction. Well, in the modern world with like computational statistics nowadays, or AI as we call it, you want more features. You get more accurate the more data you have. That's counterintuitive for how people think about these type of things. So my answer to you is we have to have immense amounts of data, right? And so we ingest a lot of it. And then that gives us enough vision, right, that we can see what a state would be and what it would not be. And then we also provide our customers with confidence and everything else. So there are times where we really, really know, right?
Yeah.
And we go, this we have 100% bet on. We see enough examples of this.
Yeah.
And sometimes we go, you're asking for a call on this, and yeah, we've got a pretty good guess, but you should still keep it
The interesting thing is he's going fishing
Sure.
to see where, the best fish are.
Sure.
And interestingly, we did one of these POCs for a very, very big branded company, and they were looking for the positive impact of event-driven
Sure.
brand marketing
Yeah,
they were
brand
doing.
Yeah.
When they went out and sucked in all of this data to do this assessment for them, in addition to finding what were the sort of positive impacts of this, which were modest, what they actually caught in the net was unknown to them, a promotion being done literally in Canada by a little subsidiary
Interesting.
that was just a regional commercial.
Yeah.
Which somehow or another bled over into the States. So it was being run in Canada by a subsidiary there, bled over into the States, and had a tremendous negative adverse impact on brand.
Yeah.
Those Canadians.
I mean, the classic example is like the social media manager intern of your Canadian, offshoot is doing something that goes viral in America, and everyone.
This one was even
it.
funnier. They bought out the National Hockey League final spot.
Okay.
And so that's gonna be huge in Canada.
Yeah.
So but that broadcasts across the entirety of North America.
Okay, so everyone
right?
saw it. Yeah.
And so suddenly this little thing there,
drippy, ugly hamburger in the hand,
sure.
and
it was just
way
poorly
it just went.
And
I'm sure maybe natively they thought it was funny.
Okay, interesting. And so you're looking at like when sales data is happening relative to when the campaign goes on, and then you tease out from there.
Yeah, think about it like one of the big inspiration for the company was Renaissance Technologies out of New York.
Sure.
So the high frequency trading firms and everything, they can do a pretty good job about knowing when things affect each other or not. But you have to have an immense amount of incredibly high speed data sets.
Talk about Accenture. You're partnering with them. Are they just an investor, or are they also a go to market channel?
Well, they actually started as one of these tests we did because they were curious.
They were a customer.
Yeah, and the interesting
which
thing
is the best way when you think about it, John. So they started as a customer, then said, "Wait a minute."
Yeah.
We have a multi-billion-dollar business around marketing, go-to-market.
It seems like a lot of people go to Accenture for these questions.
Jillians.
Bain, and BCG, and McKinsey.
And so then it went to, hey, can we help take you to market?
Yeah.
Which they've been fantastic at.
I can imagine.
And then that led to when Tomas doing this most recent round, them stepping is the biggest venture investor they've ever done.
Wow. That's amazing.
So big companies, Fortune 500, have been hiring Accenture and other consulting firms and research firms to help them understand what is driving results, positive and negative, in their business for a long time. What's the timeline to productizing what you're doing to a degree that a much smaller company, let's say a company with like $1 million a year advertising budget, can actually start to get value out of this?
Oh, that's interesting. Yeah.
Oh, so this is actually one of my favorite questions because it has to do with the law of the long-term vision of the company. One of the problems you get when you have mid-sized or small-sized firms, and they're near and dear to my heart, is that they literally have never done things. So when you have a really large corporation, right, they've been in a podcast no whether they want to be to or not. Somebody's mentioned them, right? We have all of these data sets across everything. But when you're a smaller company, right, you say $1 million a year business or something like that, you haven't done everything. So there's no actual priors, there's no data, we don't know how they react. But eventually when we see enough of the universe, right, just like you hear about world models, just like you hear about anything else, we'll actually know what the causal universe looks like. What is the actual most likely outcome of when somebody does something?
Yeah.
So in the future, in say, a couple of years, we'll actually be able to build synthetic data sets that you can send us any query, and we can respond to you what the most likely outcome would be. And where this gets really, really important is I think that, especially when you're doing private businesses, the world of LLMs and everything nowadays, I think they're amazing, but they're quickly converging, right? There's not going to be that much difference for a client between like ChatGPT and Claude. The problem is that if you're using that for business intelligence and business decisions, what are you going to do when your competitor gets the exact same answer and strategy you do? That's a real problem. And so we believe that we will take the best private data sets in the world, do stuff for just them, get our overall learnings in other places, and then we can actually provide people with strategies that are unique to them. Yeah. Right? Augment the other sets of intelligence. But
yeah, there are certain brands that will get a better return on investment from being in the Super Bowl than others. Like if you are a no-name brand and you just put up a 30-second spot in the Super Bowl, people are going to be like,
your web server might crash, right? Like all sorts of things.
Yeah, your web server you might not be ready for it, but also people might just be like, I'm not ready to learn about that, as opposed to I actually am in the market for beer right now, and thanks for showing me those Clydesdales. That makes sense.
To kind of like talk to your question, like that is an absolute dream that I have, right? Of being able to level the playing field across that, but also provide
because that's one of the advantages of these massive businesses. They can spend $20 million to figure out what's really working and then do a lot more of that, whereas a small firm is like kind of doing the vibes-based analysis. I started my career helping companies like advertise on YouTube channels and with podcasts, and they might run a $200,000 campaign, and there's some like direct attribution that they get either from a landing page or a code. But then they're like, wait, our conversion rate is just going up on the site generally.
Totally.
Is that being driven by changes that we made at the site level, changes that we made to the offer? Is it just overall lift from podcast advertising, or is it some other strategy entirely? And so the more you can bring like real business intelligence to small companies, the more they'll be able to actually compete against the big guys.
And that makes me happy because everybody should have the level playing field, and whoever has the best strategy and product should do well, right? I think that it's important to note, as we kind of talk about this thing, we spent years building the signal processor for this thing. We had to figure out how to bring in all this unstructured and semi-structured data and be able to basically do Datadog for unstructured data first, before we could even try the causal thing. And so we have years of working on that, and that ingestion pipeline, that skill there is what allows us to do what you're talking about. You can't just be like, I'm going to slap a model on top of it, right? You actually have to be able to have a sensor that can actually understand every data feed.
Have you found a company yet that Jeffrey can't get an intro to or directly connect you to the CEO? Like this guy.
Imagine this.
Oh, you want to meet this guy? Yeah, I'll give him a call right now. Here
you ever want to not take a bet on something? That's one of the things I would not take a bet on, right?
Jeffrey will find them.
Yes.
Hunt you down.
Well, congratulations on the progress. Thank you so much for coming by the Ultra Dome. And good luck with the next phase, putting the capital to work. It's going to be an exciting time, and I'm excited to hear more of these case studies as they roll out.
Yeah, I really appreciate it, both of you.
Let us know when you're ready for your first podcast customer. We got
we got to figure
analysis that we want to do. I mean, we just do the vibe space analysis.
We did a billboard. We did a billboard in New York.
Being in the house,
did really well.
We should just do it for fun. We should just do it for fun, anyways. Like, there's nothing more that I like than like looking at data sets.
We ran a billboard campaign in Manhattan. We ran exactly two billboards. We have no idea whether or not it worked. It seemed to work because people shared it a lot on social media.
For $1 million, he could tell you.
Well, we'll need to bargain that down.
For you all, we could do some drinks. It'll be fun.
Well, thanks so much for coming on the show. Congratulations on all the progress. And we will go back to our regular scheduled programming, and I will tell you about ADIO, Customer Relationship Magic, the AI native CRM that builds, scales, and grows your company to the next level. Buco Capital Bloke is also blackpilling on the timeline. It is a bloodbath in the markets. Nvidia's down 4%. Microsoft's
Michael
down
Burry
1.5%.
rage quit.
Michael Burry rage quit. We need to talk about Michael Burry. I'm sure there's something in the stack. Let's go through some quick updates as we run through the show. This is cool. This is a white pill. Google DeepMind. SEMA 2, our most capable AI agent for virtual 3D worlds. Tyler, what's the deal with SEMA 2?
Yeah, this is really cool. So this is it's like a general model that can basically play like any video game.
Sure.
Which is different because like you've seen a lot of like even early OpenAI, there was like Dota 2.
This is amazing for me because I don't have any time to play any video games anymore since I have kids. And if with this agent, I could just tell it to go play the game, and then I could
go have fun, and then describe the fun you had, and I'll read it, and I'll get to fully experience
and email
the fun.
it to me, and I'll have Nick read the email and summarize that to me in a text message. That would be my experience of the video game. No, seriously, what I actually want this for is I hate how modern video games, it takes 20 minutes to set up. Have you ever experienced this? It's like
going through the tutorial.
Remember when I made you play Halo? When I made you play Halo, it took like 10 minutes for you to actually get into the game, and then the actual game took you 5 minutes to play. And so there are a lot of times when I hear a new game, I'm like, I only have 20 minutes in my weekend to play this game. I want to jump straight into the action. I don't want any of the opening unskippable cutscenes. I don't want any of the tutorial, learn how to jump, learn how to crouch. I already know how to move. I know what the stick does. Don't tell me that. This is going to solve that for me, hopefully.
Yeah, but this is actually, yes. I think this is like one of the most interesting papers this year.
Yes.
A big part of it is it's general, so you can put in a new game, and then it does like self-play essentially.
Sure.
Which is like really important because that's like it's teaching itself.
Yeah.
This is basically the first like agentic model that can like see a completely new environment.
Yeah.
And then do self-play.
Yeah.
where it gets better. So
I wonder how wild. I'd love to know how diverse the inputs are. Like, does it expect an Xbox controller's worth of inputs? Does it expect a keyboard's worth of inputs? Because that's more inputs that it would need to learn. That's fascinating. And then I wonder what happens if you start marrying it to generative world models in the future as those become games. Like you have this weird like agent on simulated world. You're simulating both of these. That's very interesting.
A big part of it is they connected it to Genie 3.
They did? No way.
It worked. So you have a generative, basically, video game where it's like generating frame by frame and it has a little keyboard and stuff. And then you have the generative agent that like learns what the world is and then actually plays it. So you see this like flywheel kind of starting very well.
Whether you're going long or short, go to public.com, investing for those that take it seriously. They got multi-asset investing, industry-leading yields, and they're trusted by millions.
They also acquired Alto
big news.
IRA, crypto IRA.
Yes.
You're now going to be able to hold digital assets in your retirement accounts all on public.
Yes.
They acquired Alto for $65 million. That got announced this morning. So great pickup from the public team. Major white pill, Mira Murati's startup Thinking Machine Labs is in early talks. We love early talks. Some of our favorite talks to raise a new round of funding at a valuation of roughly $50 billion. More than 4x their valuation.
Everything's cooking.
Everything's cooking.
Stop blackpilling.
In other news, Anthropic disrupted a highly sophisticated AI-led espionage campaign. The attack targeted large tech companies, financial institutions, chemical manufacturing companies, and government agencies. We assess with high confidence that the threat actor was a Chinese state-sponsored group. I guess they were using Claude, I think is...
Yes. I think they were using Claude Code, actually.
Weird.
So they were vibe coding espionage.
Yeah, it was pretty funny. I read through some of the blog post, and it was like some of the interactions of like the hackers, and it was like, this is what they were saying to the model. They're like, okay, good job, Claude, but I think this part is wrong. You can see like the actual transcript. Very bullish for Anthropic.
Well, go to 8sleep.com, get a Pod 5, 5-year warranty, 30-night risk-free trial, free returns, free shipping. Michael Burry appears to be shutting down Scion Asset Management. He said, "Dear investors, with a heavy heart, I will liquidate the funds and return capital, but for a small audit/tax holdback by year's end. My estimation of value in securities is not now and has not been for some time in sync with the markets. With heartfelt thanks, but also with apologies, I wish you well in your future investments. I do suggest investors contact my associate PM."
Did he really quit right before the market started correcting? Is this one of those 90% quit right before 90% of gamblers quit right before
apparently they
finally call the top correctly?
Yeah, it does seem odd. I mean, if there is a crash and he was going to be short, but he pulls out before like getting that short thesis to work and realizing the results of that, it really changes his legacy. It changes the meaning of that meme. It changes the meaning of the Michael Burry image, in my opinion. But we'll see. I mean, he might be out of step for years, and we might look back on this and say that it was great that he got out, and it was great that he didn't short the greatest bull market.
His memory will live on through meme images from The Big Short.
And through whatever he gets on his wrist. Go to getbezel.com. Your Bezel Concierge is available now to source you any watch on the planet. Seriously, any watch.
In other news, Paramount, Comcast, and Netflix are preparing bids for Warner Bros. Discovery. They will have until November 20th to submit non-binding first-round bids.
Yeah.
Warner Discovery is holding the auction process in the hopes of having it completed by the end of the year.
Have you seen how expensive streaming is getting? This is on the cover of the business and finance section in the Wall Street Journal. The price has gone up. Pretty much everything. Netflix has gone from something like $5 to $25 at the top end. Everyone's raising the price, and now they're creating bundles of streaming properties.
It's only going to be $2,000 a month.
And they're all going to have $2,000 a month. They all have ads constantly.
They all have different logins.
All different logins, and you can barely rebundle them even if you try.
I wish that we could get Jeffrey in here to talk about this Warner Bros. Deal, but you're probably too close to the metal on this one. to be able to really comment on it.
Well, we'll tell you about Wander instead. Find your happy place. Book a Wander with inspiring reviews, hotel-grade amenities, dreamy beds, top-tier cleaning, and 24/7 concierge service. It's a vacation home, but better.
In more news, apparently Vine is being rebooted under the name Divine with funding from Twitter's former CEO, Jack Dorsey. The app plans to feature more than 10,000 previously archived Vines and does not allow AI-generated content.
That's remarkable. There have been so many Vine revival attempts. Elon was talking about bringing it back at one point. I believe the founder of Vine was talking about bringing it back and did a number of different projects. There was a project called V2, right? At some point. It would be fun. I was a huge fan of Vine when it came out. I really enjoyed it as a new creative medium. It was very, very interesting, very, very fun. Let me tell you about AdQuick.com. Out-of-home advertising made easy and measurable. Say goodbye to the headaches of out-of-home advertising. Only AdQuick combines technology, out-of-home expertise, and data to enable efficient, seamless ad buying across the globe. What else?
In other news, Strategy has gone below 1 NAV for the first time ever.
Whoa, that's
meaning
crazy.
that Saylor's BTC holdings are worth less than their total debt. How is that even possible? That seems very concerning. Anyways, their debt has long maturities, 2027 to 2032. They're not margin loans, but eventually they'll be forced to sell if they can't make interest payments. They have something like a $700 million worth of interest payments due next year, and they have, I think, under $50 million of cash on hand at the moment. So they'll either need to raise more or start selling.
And just like immense pressure from the other products in the market. I feel like if you want access to Bitcoin, which has been Michael Saylor's flagship asset, you were able to initially mine it for free, which was weird, then buy it on Coinbase with a somewhat clunky process. Now it's pretty simple. Now you can buy Bitcoin on a credit card. You can get it in almost every app. You can get it in an ETF. You can get it in your retirement fund. There are a whole bunch of different ways to get exposure. So that particular strategy is not the only one in town. Anything else, Jordy? Or should we wind down for the day and say goodbye to everyone? Leave us 5 stars on Apple Podcasts.
So everybody go DM the White House now on X and just request the 100-year mortgage. We need some type of bullish announcement. Otherwise, tomorrow will likely be even worse.
Yes.
But
if you do DM, X has changed the way DMs work. Now there's unified DMs and encrypted chats all in one place. That is the last piece of news of the day. Well, thank you for tuning in. Leave us 5 stars on Apple Podcasts and Spotify, and we will see you tomorrow.
Can't wait.
11 a.m. Pacific. Sharp. Goodbye.
Cheers.